What's good, crypto family? Hey, I see everybody in the building. Meme Lord should be coming in. Give me a second. How's everybody doing? So this is what I'm going to do, right? Before we even get started, I'm going to, let's see. Put the number up to have you guys call in before this press conference start. Let me get the number because I did say I'm gonna do a call in for you guys. Let me put it in. Give me a second. 786-767-4453. So that's the call-in number right there. Call in if you guys want to tap in with me. But other than that, though, man, check this out. Doggy-Lon Mars. Repost if you believe in the Doggy-Lon super cycle. Talk to me.
So, Brown, my brother.
What's going on? What's going on? Who's calling in?
Bro, holding 24 billion strong because of you and me, Lord, man. Just want to give you thanks for all the
I appreciate it, man. You got some big bags, bro. And also what's awesome about this is the market is dipping, which we all know. A lot of these banks and regulators, they're like, they're now getting to the adoption of crypto. And listen, there's over 1 million tokens that has been created. And out of those 1 million tokens, you found that gem that you're able to hold and that is real. You know what I'm saying, bro? Hello? I think it hung up. Call me back. So shout out to Christian for hitting me up. Again, hit that number if you guys want to tap in. Meme Lord should be coming in shortly. But with this here, man, and when Meme Lord get up on here, Render has a lot of connections. All right. So this whole speech, what's going to happen today is this here. U.S. House Financial Services Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence. A golden age of digital assets, charting a path forward. So we got another caller. Yo.
What's up, Crypto Brown? What's happening, man? I just saw your number on there. I want to say thank you for your videos. Thank you for Doggy-Lon Meme Lord for being the #1 dude. I'm glad he's doing well. Y'all the shit, bro.
I appreciate it.
Yeah, man. I just want to tell you, man, I've been watching your videos when I started investing in Doggy-Lon Mars, man. And it's been crazy, man. I believe in the project. I believe in all y'all. Everybody that's watching. Just want to say, let's get it, man. Let's get these bags.
Let's go. Let's get these bags. I appreciate you, bro.
Yeah, man. I tell everybody about you, dog. I tell everybody watch Crypto Brown. Watch Crypto Brown, man. Tell everything about Doggy-Lon Mars. Watch Doggy-Lon Meme Lord, man. He tell everybody. I tell everybody, man.
Facts.
So, I just want to let you know that, man. I've been supportive, bro.
I appreciate it. Hey, try to stay locked in with this the subcommittee video that's about to be starting at 2:30. So I hope you stay locked in and watch.
I'll be on, bro. I've been looking forward to you on I think it was last weekend.
Yes, sir. Yes, sir. So I appreciate you, bro. If anything, when Meme Lord come up here, if you guys want to call back, hit back that number. Hello? Uh, hung up. Hung up. Alexandra, he says we are going to Mars. Let's effing go. I appreciate you guys tapping in. See Shibu, what's up, bro? What's the word? That everybody tapping in right now. Okay. Yo, 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 yo.
Hey, Crypto Brown. I tried calling the first time. I'm not sure why you can't hear me, but can you hear me now?
Yes.
My brother, I just want to say the same thing like the other gentleman. Just thank you, me, Lord, and the other content creators for giving, your undivided time and providing information. I've been holding 24 billion strong because of you guys. So I just want to say to everyone, like, hold on tight. This is the most unique.
Damn, what the hell going on with my damn thing? Hold on, hold on. Damn. I'm sorry, guys. Hold on. Seem like the signal just be dropping. Shit. Yo. Hello? Okay, I guess they hung up. I don't know. I guess I'm gonna have to find another app because I know if I drop my real number on there, y'all will blow it up. Not in a bad way, but we got some other people that may just want to blow up my number, just say some crazy stuff. You know what I'm saying? Hello?
Yo.
Yes.
Can you hear me?
Yeah, I can hear you now.
I just wanted to say,
Hello? No, it's not connected to my Bluetooth. Give me a second. Y'all give me a second right quick, man. Let me see what's going on. Y'all give me a second. Because I know you guys want to tap in. But other than that, how you guys doing today? Damn. Pioneer, pioneer, pioneer. Christian and I believe I forgot his name, but can't wait for the burners to start. Watch it take off. Krypton Martian is in the building. Cameron TV is in the building. They're gonna put some respect on Dr. Mars. Damn right. What's good, Meme Lord? He just glitched out. But yeah, while we're waiting, it's 2:19. Did they start? No, they didn't start yet. Full screen. Do this way right. Do it like that. We're gonna start in a little bit. Yeah, I don't know what's going on with my damn phone, man. Let's do this. Get up out of here. You guys heard that, right? Let me see. Meme Lord.
Hey, can you hear me?
Yes, I can hear you.
Yeah, sorry. The last day has been scary because, like, since the tumors are partially blocking my rectum, I couldn't go bathroom for the last day, and I could get an infection. So I was like, I had to take a whole bunch of stuff to clear me out. So that's why it was taking a while, man.
No,
But I'm here.
take
I'm here, and I'm good.
take your time, bro. Take your time. We good. Hold on. I got someone call. Hold on. Yo, yo, yo.
Hey, what's going on, Crypto Brown? This is Crypto Martian here. How's it going?
Pretty good. Pretty good. How you doing?
Doing good. I just wanted to check in with everybody and let everybody know. Hold strong. Don't let these dips and rips scare you out the market. If you can't hold, you won't be rich. So just hold in with us. You're not alone, and we're all wishing and praying for it to happen sooner than later.
Yes, sir. Yes, sir. It's our time. This is our year. Like what Dr. Lamar said, this is the year of Dr. Lamar's.
Manifesting our best year yet.
Yes, sir. I appreciate you tapping in.
Most definitely. You guys take it easy.
All right, you too, bro. I appreciate Crypto Martian again. That I guess Christian and the other guy phone was glitching, so it's not my phone then. Meme Lord, you there?
Yeah. I was just gonna say the same thing about the market. It's like, I just did my TA the last couple of days. We've been in a descending wedge, which is normal. After we break out of that, we should be hitting another 107K, which is probably in the immediate short term. Long term, we're all bullish. But this is a good time to load up on all your favorite cryptos. It's like, for me, it's like Christmas every day, or like a Black Friday. You know, all the
Right.
discounted cryptos. Like I said, even Illuvium, which is it's a good project. That thing went down to 15-20 bucks, and it was at
Uh,
1600 last bull run. So what did that tell you? And gaming's big this year. Mm,
yeah, we're about to go off. We're about to go crazy, man. We're definitely about to
and
go crazy.
yeah, like, super crazy. Even Dogalon Mars said the Dogalon Mars super cycle's coming. Did you see that?
Hold on, let's see. Let's see. Yes, right here, baby. Repost if you believe in the Dogulon super cycle. You see
And they
it.
know what's coming. They know, because I know a lot of people been not losing faith, but saying, "Hey, they've been quiet. What's been going on? No beta testing, no releases, no nothing." They're working. They're working. And actually, I'm gonna post a screenshot of it. But actually, the other day, I think like 2 Fridays ago, I messaged the official Doja on Mars account on X, and I said, "Hey, do you know when the bridge is going to be live for the XRP to Doja on Mars bridge?" They finally messaged me yesterday from actually the official. I'm going to post it later, saying, "I'll make sure this happens." So
Oh,
hopefully that live goes. Hopefully that proposal goes live. I honestly think, not in a bad way, they kind of forgot, but that's just telling you, if they forgot, that means that they're working, they're building. That's what they mean by terraforming. They're working every day.
they got to. They got to because great things are here to come.
Yeah, for sure. And like I said before, if it takes a little more time, hey, good to load up. We went down to 6 zeros 18, 6 zeros 19. When we go a little, like, way higher, we're gonna complain, man, I should have bought more, instead of worrying why we keep going down. It's like I tell everybody, it's like Bitcoin. Every crypto's tethered to the Bitcoin. We're climbing the mountain. If Bitcoin falls, it's gravity. We fall double. So that's natural with altcoins.
Yeah, yeah, you're right. And then also you were telling us about your TA before the Golden Age Committee starts. You want to address any other news, and then we'll come after the video and answer some questions.
Oh well, yeah. About my TA, I had said, like, so, like, let's just go to BTC. I had said 269K, but it's not looking like that much anymore. Now we're looking at like maybe 150 to 180, the highest, maybe 200, on a good day. But everybody has to remember now that institutions are buying, now they're looking for, they're going to be making money too. So what's going to suck is after this bull run, Bitcoin's going to take a little bit of a dump, maybe 70, 80K. The lowest we might even see Bitcoin is like 65, 70K. I don't think we'll ever see it any lower after this, unless there's like a major, black swan event and whatnot. And as
Right.
far as Dojalon, when I did my TA, let's just say with no utility, let's just say if it hits the all-time high, and during the bull run, I had put four zeros one to like a 404. But with everything going on, it's not going to partners and all, the sky's the limit.
So
Like
you
it's
guys
kind of
heard what
difficult.
he said. Tell them again, meme lord. Tell them again.
So with all the stuff going on, like Burns, the Great Burn, the Rufus blockchain, what partnerships they have, honestly, I can faithfully say that that'll get us down to at least like 301 to 304 if everything goes okay. And it is, because I think that's why they're taking their time. They don't want to give us a polished turd. They want to give us 100% out the door, fully functional blockchain. Because what if we wait all this whole time, they do the blockchain, and then nobody's using it? It's going to be like, well, you did all this hype for nothing. So I think when they mean by terraforming and we're Mars, I think they understand. Well, not many people understand what they mean by that. To me, that means they're locked and loaded. They're ready, and they know what they're releasing. Because now we're a full like blockchain. After that gets released, if you notice, I did the deep dive. Actually, SHIB is a lie. It's not Ethereum. It's a layer two. But this is what people don't know. It's not a blockchain. It's a protocol, which is way different. All the protocol is just sets rules for the blockchain. What a blockchain does is it actually holds all the transactional information, and it actually makes transactions. So for me, when Shib says Shibarium is a blockchain, that's false advertising. It's a protocol. Same thing with Floki. They don't actually have a blockchain. What they use is called TokenFi. So now you got to interact with another token in order to interact with Floki. So what they did was they call it TokenFi, and what they do is they actually help real world assets, get launched and whatnot, and to do projects. But that's TokenFi. The problem with that is Floki don't have its own blockchain, so you're actually having to go outside the ecosystem in order to build and use Floki, even for FlokiFi too. So I did my homework. Then I did the deep dive about Doge. The same thing. They made something called Chain, which is a side blockchain, but you guess what? You have to interact with another chain in order to do that. So like you could use your Dogecoin in order to interact with a Doge chain, but it has nothing to do with that ecosystem. It was somebody who came and built it on the side because they don't have no devs. So what sets us apart from all these big name meme coins is we're going to have our own ecosystem, and the only thing that's going to power that is Elon, the native token. And that's what I don't like about SHIB. You got Shiba Swap, Leash, but whatever else they have, it's like, so you're telling me in order to interact with your ecosystem, I have to buy like 3 different tokens. And for me, that's more expensive because then you're like swapping here, doing this, going there. I got to buy this, and that. When with Elon, you just need one token.
So you know a lot more about Bybit. See Chibu, he says, so why does Bybit has Dogelon at 2019? Because a lot of people want that and like they want to know why is it a different price than on other exchanges, even though Dogelon Mars is a perpetual derivative. Can you explain that to them, please?
Yeah, sure. So the reason why they did it, it was the same thing because we have a large supply. That's why we're six. Well, we were like 7, 8 zeros in a while back, when it first started. So what they did was, if you notice, it's not called Elon. It's called 10,000 Elon. So what that means is what they did was they put it that way to lower the price. It's the same thing. Like the 2 zeros, it's basically the same thing when you interact with the contract. But the reason why they put it that way, because now in Bybit, they're playing with the big dogs. We're talking about like veterans, crypto, like basically whales, people who have money, institutions. So when they look at a coin, they're going to say, wait, this is 202, but really it's 6 zeros two, or whatever it is at that price. And what it does is it makes it more appealing to investors. It's basically the same thing. It's like when Doge, how Doge, baby Doge, they actually got listed on what's that thing called? Finance. If you notice, they called it 1 million baby Doge. Why?
Right.
Because their supply is so high. So if you look on 1 million baby Doge, I think the zeros are like at 3 or 4 instead of like 8. So that's why they did it, to make it more appealing and to make it look more professional. Because remember, now we're not. I feel we're not a meme coin anymore. I know everybody say, "Oh, what? We are a meme coin," but technically, we're actually now a derivative project. We're a derivative. What do you call it? Coin. So what that means is we're more like business. And what I did when oh, are they on already?
Yeah, they're on. They just got on.
Extraneous material to the chair for inclusion in the record. I now recognize myself for 4 minutes to give an opening statement. Good afternoon and welcome to the first hearing of the House Financial Services, Digital Assets, Financial Technology, and Artificial Intelligence Subcommittee. Today, we resume the work of this subcommittee started last Congress under the then leadership of Subcommittee Chairman French Hill. I'm grateful to the now full committee chairman for trusting me to pick up the mantle and continue our legislative work to provide clarity for the digital assets ecosystem. Digital assets present a clear opportunity for the advancement of financial services in the United States. This technology has the potential to modernize our financial infrastructure, enhance the dollar's dominance in global markets, increase the efficiency of payments both domestically and abroad, and provide American businesses and consumers with a faster, cheaper, more transparent way to transact in an increasingly digital economy. Under the Biden administration, we saw regulatory overreach and a pattern of enforcement-driven actions that stifled innovation, especially in the digital assets ecosystem. Instead of working with Congress to establish clear guidelines, the Biden administration opted for an unpredictable and hostile approach that left American entrepreneurs, businesses, and consumers in a state of uncertainty. Agencies took inconsistent, often contradictory actions, pushing innovators offshore and threatening Americans' leadership. This lack of regulatory clarity not only hurt American investment, it also impacted everyday Americans. Let's be clear. The Biden administration's approach opened the door to bad actors and left consumers more vulnerable to fraud. While the EU and UK and even developing economies have advanced regulatory frameworks in digital assets, the United States has fallen behind. Our government's failure to act could mean that the benefit of digital assets and blockchain technology will be realized elsewhere, while American consumers, entrepreneurs, and financial institutions are left navigating an uncertain landscape. Under the Trump administration, we will course correct by creating a workable pathway for responsible digital asset companies to set up operations here in the United States. Encouragingly, several positive steps have already been taken. President Trump issued an executive order on digital assets. The SEC repealed SAB 121. The FDIC has announced that it is reevaluating its supervisory approach to crypto-related activities. And both the SEC and Trump administration have stood up working groups to tackle these challenges. Last Tuesday, the White House's AI crypto czar, David Sachs, joined Chairman Hill, Thompson, Bozeman, and Scott for a press conference where they all agreed that it's time for both regulators and Congress to get this done. Last week, the chairman and I released the Stable Act, a discussion draft to provide a clear regulatory framework for the issues of payment stablecoins. We appreciate the feedback from all relevant stakeholders. The reality is that the status quo for digital assets is untenable. Regulatory and legislative clarity is needed now. Together, we can ensure that stablecoin issuers, digital asset firms, and blockchain developers operate under fair, transparent, and predictable rules in the United States. That means working together. The Trump administration, Congress, regulators, and market participants. to craft thoughtful policies that uphold our national security, protect investors, and encourage the responsible development of digital assets in the full ecosystem. Today's witnesses bring a wealth of knowledge and experience on these issues. I look forward to hearing their insights and how we can learn from the mistakes of the past to strike the right balance between innovation and consumer protection. Thank you. I look forward to your testimonies. The chair now recognizes the ranking member of the subcommittee, the gentleman from Massachusetts, Mr. Lynch, for 4 minutes for an opening statement.
Good afternoon, and thank you, Mr. Chairman. And let me be the first to congratulate you on your selection as chair of this subcommittee. And I do look forward to our partnership this Congress. With the wide subject matter jurisdiction, digital assets, fintech, and artificial intelligence, this committee provides considerable opportunity for collaboration. I also want to thank our witnesses for your willingness to help the committee with its work. The Trump administration and House Republican leadership have clearly demonstrated their eagerness to enact crypto-friendly laws and regulations. As you noted, Mr. Chairman, one of President Trump's first executive orders established a digital asset working group that will be comprised of regulators handpicked by the crypto industry. In addition, just days before taking office, President Trump also issued a meme coin to further his own financial interests, so he is all in. The crypto industry spent $119 million in this last election lobbying Congress, and proposals such as a cryptocurrency stockpile and the prohibition of a central bank digital currency speak to the crypto industry's powerful influence. Not surprisingly, House and Senate Republicans have also announced plans to make digital assets a legislative top priority. Nonetheless, cryptocurrencies remain highly volatile and speculative instruments that, if poorly handled, have the potential to destabilize our economy. I continue to have serious concerns about crypto scams, money laundering, and illicit finance uses. In 2023, Americans lost over $5.6 billion to such scams, and illicit addresses received approximately $40.9 billion in cryptocurrency. On the advent of this golden age of crypto, I remind my colleagues of the crypto winter, in which major companies including FTX, BlockFi, and Celsius collapsed, and Sam Bankman-Fried was convicted of massive fraud. Fortunately, because of our robust securities and consumer protection laws, most of the victims of those scams were not U.S. citizens. Similarly, the damage caused by the failures of Silicon Valley and Signature Bank did not spread to our broader financial system. I agree with most of my colleagues that a regulatory regime is needed, but not one that reflects a wish list from industry advocates. As this committee considers legislation to address stable coins and the market structure, I hope we can have collaborative and bipartisan discussions. We must seek input from law enforcement, the Financial Crimes Enforcement Network, academics, and other experts to ensure robust consumer protection, anti-money laundering, and illicit finance safeguards are in place. I worry that by allowing the digital assets industry to access our banking system, we invite the next financial disaster. I served on this committee during the 2008 financial crisis and watched American taxpayers be forced to bail out major financial institutions that made risky decisions in the name of innovation. The digital assets industry has had years to prove its use cases. Promises of financial inclusion, lower costs, and faster payments are better achieved through public policy solutions. This subcommittee should focus its time on exploring legitimate innovations that have the potential to expand economic access. Last Congress, I was encouraged by the bipartisan approach to exploring artificial intelligence. Through the Working Group on AI, which I co-led alongside Chair Hill, and a roundtable I hosted at MIT with faculty and experts, we found shared policy goals. The emergence of international competitors, such as DeepSeek, demonstrate that we must move quickly to ensure U.S. competitiveness. Additionally, I hope to continue working with my colleagues on fintech policy issues we seem to agree on. These include addressing financial data privacy, expanding data portability, reducing the cost of payments, and encouraging innovation that expands economic access and financial inclusion. Mr. Chairman, I look forward to continuing the important work we began last Congress, and I yield back.
Gentleman yields back. I, too, look forward to working with you, Representative Lynch. I think we have a great opportunity in front of us. The chair now recognizes the ranking member of the full committee, Ms. Waters, for 1 minute.
Thank you very much. While Republicans want to discuss charting a path forward on digital assets, co-presidents Elon Musk and Trump continued their hostile takeover and illegally shut down the Consumer Financial Protection Bureau. I find it somewhat disheartening to hear my colleagues talk about guardrails for stablecoins or digital assets as the agency that has clawed back $21 billion from predatory companies for harm consumers is being dismantled. That being said, I unveiled the fruits of nearly 3 years of work between former Chair McHenry and myself. Stablecoin legislation that was jointly drafted by my staff and Chair McHenry's. I believe that this legislation provides the best foundation for moving forward to get a federal framework signed into law. I thank you and I yield back.
The gentlelady yields back. Today, we welcome the testimony of Mr. Jonathan Yahim, the Deputy General Counsel and Global Head of Policy and Government Relations at Kraken Digital Asset Exchange. Mr. G. Kim, President and Acting CEO at the Crypto Council for Innovation. Mr. Coy Garrison, Partner at the law firm Steptoe. Mr. Jose Fernandez de Ponte, the Senior Vice President and General Manager of Blockchain, Crypto, and Digital Currencies at PayPal. And Mr. Timothy Masid is a research fellow and Director of Digital Assets Policy Project at the Kennedy School of Government of Harvard University. We thank each of you for taking your time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your summary. Without objection, your written statements will be made a part of the record. Mr. Yahim, you are recognized for 5 minutes for oral remarks.
Chairman Stile, Ranking Member Lynch, Committee Ranking Member Waters, thank you for the opportunity to testify today. My name is Jonathan Yahim, and I serve as Global Head of Policy and Government Relations at Kraken. Our business was founded in San Francisco over 13 years ago and has steadily grown into one of the world's largest and most trusted digital asset exchanges. I've served in my current role for over 3 years and spent the prior 15 years in private sector roles based in US and Europe, including over a decade of experience with two of the largest traditional market infrastructure groups. Kraken has invested heavily in supporting effective policy outcomes around the globe. This includes engagement with governments, regulators, and our industry partners across the US, EU, UK, Canada, Australia, and many other developed and emerging markets. Here in Washington, we've continued to support our leaders in Congress in passing foundational market structure legislation necessary to regulate centralized intermediaries and secondary market transactions. Kraken's role in the digital asset ecosystem is diverse. Today, we serve over 15 million customers around the world. We custody over 42 billion in assets on our platform. We have a team of over 2,000 professionals across 60 countries that support the 24/7, 365 global nature of the users and markets that we serve. We advance our mission to expand the adoption of cryptocurrencies in 3 key areas. First, we operate a centralized exchange for crypto markets. We offer a staking program and related products and services. Second, we power traditional market investment allocation into digital assets. This includes derivatives offerings in eligible jurisdictions, the world's leading benchmark provider, which powers a majority of the exchange-traded products that have been approved for trading here in the US and other major markets. We also operate a novel state-chartered bank, which offers institutional custody under an innovative Wyoming legal framework. Third, our on-chain business includes our wallet and layer 2 blockchain called Inc., which serves as a seamless bridge to DeFi for our new frontier of innovative developers and users. Despite the growth in our markets and years of bipartisan work in Congress, the US has fallen behind other jurisdictions in passing fundamental rules for centralized intermediaries. The opportunity and urgency for legislative and regulatory clarity is here. Meaningful progress has been made despite the failed and harmful policy approaches we saw in the last administration, which included regulation by enforcement and downward pressure through the banking system. This slowed or halted responsible growth and deterred investment, job creation, and innovation in the United States. Among many important topics, I'd like to highlight a few key components that are central to effective market structure policy frameworks. First, Congress should grant spot market authority to the CFTC to regulate centralized intermediaries and secondary market transactions in digital commodities. Second, effective disclosure requirements will provide transparency and customer protection. Third, we must avoid blunt application of centralized rulebooks to decentralized protocols that do not have centralized governance systems, infrastructure, or management. Policymakers must continue to evaluate and craft best practices and distinct policy approaches to address DeFi. The leadership from many distinguished members of this committee has proven that good crypto policy is not partisan. Speaking from my own experience the last several years and on behalf of my colleagues at Kraken and around the industry, we are incredibly encouraged to see Congress and the administration now working together towards regulatory clarity. The U.S. must pass rules that are fit for the U.S. markets. But there is often great value in learning from other jurisdictions that have already advanced foundational rules of the road for centralized intermediaries. As we look ahead, U.S. leadership and international cooperation will be necessary to avoid market fragmentation and support the inherently global nature of the digital asset ecosystem. Industry consensus and nonpartisan collaboration is critical for the United States to accelerate towards these goals. We look forward to continuing to support these efforts. Again, I thank you for the invitation and look forward to our discussion.
Thank you, Mr. Yahim. Mr. Kim, you're recognized for 5 minutes.
Thank you, Chairman Style, Ranking Member Lynch, and members of the subcommittee for the opportunity to testify today on how the United States can best chart its path forward to ensure a golden age for digital assets. I believe that achieving this goal will require a comprehensive federal legislative framework for digital assets. I am pleased to represent the Crypto Council for Innovation, CCI, a global alliance of industry leaders across the digital asset space. CCI is grateful that so many members of Congress recognize the need for US to lead when it comes to digital asset innovation. Under the leadership of this committee, we experienced great bipartisan progress during the 118th Congress. And I respectfully submit that it is critical for Congress to continue such efforts to provide the digital assets industry with the needed clarity to ensure continued growth and leadership in the United States. Over the past 15 years, digital assets have evolved from a topic of curiosity to transforming financial services and how we architect future economic systems. The approvals of spot Bitcoin and Ethereum ETFs, growing retail and institutional participation, and increased adoption of digital assets signal an industry not only meeting its potential, but changing how we live. Indeed, the global digital asset market has seen substantial growth with a market cap that currently exceeds $3 trillion. The stablecoin market alone has grown to over $200 billion, demonstrating the increased use of digital rails for payments. Tokenized assets and new blockchain-based transaction rails can improve financial access and inclusion, reduce counterparty risk, improve operational efficiencies, and lower costs. The industry is working to improve on the legacy financial system and solve for gaps that have harmed historically disadvantaged populations. Against this backdrop, other major jurisdictions have recognized that we are in a race to the top in harnessing and benefiting from this new technology. These jurisdictions are delivering exactly what the US digital assets industry has been requesting: regulatory clarity through a thoughtful, tailored regulatory regime that recognizes the potential of digital assets. To that end, it is imperative that the US build upon the progress made during the 118th Congress and ensure US leadership in digital assets at the global level. Increased clarity regarding regulatory expectations will unleash further innovation and ensure that American markets remain the envy of the world. CCI is encouraged by this administration's early efforts to catalyze further digital asset development in the US, including recognizing digital assets as a national priority in the recent executive order. More still needs to be done, however, to unwind the significant damage and uncertainty caused by a regulation by enforcement approach under the prior administration. Unfortunately, during Chairman Gensler's tenure, the SEC brought over 125 enforcement actions related to digital assets, but issued no clear guidance or rulemakings to clarify when an asset is in fact a security. This lack of regulatory clarity has driven companies offshore to jurisdictions with more defined rules and less ambiguity. If a regulatory approach is pushing lawful businesses to move offshore, this must change, and we believe that change has begun. In the interest of time, I will briefly outline the specific steps I view as critical to achieving the golden age of digital assets in the US. First, Congress must pass market structure legislation to clarify when a digital asset is a commodity or security, and to give clear statutory authority to the CFTC to regulate the spot markets for digital commodities. Legislation should also address risks associated with digital assets markets and technology and provide key consumer protections. Second, Congress should establish a comprehensive framework for the regulation and supervision of stablecoin issuers. Such a bill should also consider rationally integrating effective state-based regulatory models. Accomplishing this would realize the powerful potential of dollar-backed stablecoins in providing individuals with more choice in payments while further solidifying the global role of the US dollar. Finally, Congress and administration should prioritize supporting the development of decentralization and DeFi technologies. Policymakers should recognize the importance of self-custody solutions and software which enable individuals to securely manage their own digital assets. Congress can unleash digital asset innovation through a forward-leaning legislation. This is the surest way to guarantee that the United States commands the digital asset future while best protecting consumers and fostering economic growth. Thank you so much again for the opportunity to testify, and I look forward to your questions.
Thank you, Mr. Kim. Mr. Garrison, you are now recognized for 5 minutes.
Thank you, Chairman Stile, Ranking Member Lynch, Committee Ranking Member Waters, and members of the subcommittee for inviting me to testify today. My name is Coy Garrison. I'm a partner in Steptoe's blockchain and cryptocurrency practice, where I've advised clients for the last 3 years. Prior to joining Steptoe, I was an attorney at the SEC for about 9 years. I had the honor of serving as counsel to Commissioner Hester Peirce and also serving in multiple roles within the Division of Corporation Finance. I testify here today on my own behalf, not on behalf of the firm or its clients. Congress and this Trump administration have a tremendous opportunity to work together to bring sensible regulation to the digital asset industry. New leadership at federal financial regulators are already beginning to reverse the failed crypto policies of the last 4 years. The SEC in particular has a heavy burden to undo the harmful policy decisions that former Chair Gensler brought, and they have begun the hard but necessary work of rulemaking and providing actionable guidance. However, regulatory actions alone will not be sufficient to stand up a comprehensive regime. Congress needs to fill regulatory gaps by passing legislation for both digital asset market structure and dollar-denominated payment stablecoins. First, I want to underscore that the moment for action is now. The open hostility of the prior administration towards this industry has resulted in a marketplace with no federal regulator, no protections for token holders, and fewer US-based projects. Fortunately, we live in a very different world today. The change at the SEC in particular is a breath of fresh air. Acting Chairman Mark Ueda recently announced the formation of a crypto task force and appointed Commissioner Peirce to lead its efforts. Results were immediate. The SEC rescinded the widely maligned Staff Accounting Bulletin 121. Their work, however, is just beginning and was recently previewed by Commissioner Peirce's announcement of 10 different work streams for the task force. So what can the SEC actually accomplish? I offer the following suggestions, which I believe are consistent with Commissioner Peirce's 10 priorities. First, the SEC should articulate a sound legal interpretation for when digital asset transactions are subject to the securities laws. A clean break is needed from the Gensler era's legal imprecision and sweeping assertion that nearly all digital assets are securities. The interpretation should begin with an acknowledgement that the digital asset itself is not a security. A disciplined transaction-by-transaction analysis must be used to determine whether an investment contract is present because it is required by the case law and should be adhered to by the Commission. Second, the SEC should consider withdrawing Gensler-era litigation alleging unregistered exchange, broker-dealer, and clearing agency activities. As a preliminary matter, it is far from clear that these transactions meet the elements of the Howey test. Even if the new SEC believes that it has jurisdiction over secondary market transactions, consideration should be given to whether beginning a rulemaking process would be a more productive pathway to the registration of covered entities. In an encouraging sign, I note that just yesterday, the SEC and Binance filed a joint motion to stay their litigation for 60 days. Third, the SEC should consider how to better facilitate token offerings in the US by amending existing exemptions and dusting off Commissioner Peirce's token safe harbor proposals. While the SEC can consider these and many other actions, Congress continues to have a vital role in establishing a workable framework. With respect to market structure, I urge the subcommittee to consider the following principles for inclusion in any legislation. The need to establish clear lines between the SEC and the CFTC and a process to determine which transactions are subject to the different agencies' jurisdictions, requiring disclosures that are tailored to the needs of digital asset holders, allowing for disintermediated trading and real-time settlement of digital assets, imposing similar types of corporate controls and risk management requirements that exist today for securities and derivatives intermediaries, as well as requiring segregation of customer assets and prohibiting the commingling of funds. A second regulatory gap that requires congressional action is the federal oversight of dollar-denominated stablecoins. The discussion draft of the Stable Act provides appropriate protections for consumers and establishes a regulatory framework for the issuance and operation of dollar-denominated payment stablecoins. In conclusion, the timing is right for Congress and the administration to work together to implement much-needed regulatory reform. Thank you for your leadership on this important topic, and I look forward to your questions.
Thank you, Mr. Garrison. Mr. Fernandez de Ponte, you're now recognized for 5 minutes.
Thank you, Chairman Style, Ranking Member Lynch, Committee Ranking Member Waters, and members of the subcommittee. Thank you for the opportunity to testify today. My name is Jose Fernandez da Ponte, and I serve as Senior Vice President and General Manager of PayPal's blockchain, crypto, and digital currency business. I appreciate the invitation to address the subcommittee regarding PayPal's vision for the future of digital payments. Today, I would like to focus my remarks on how responsible innovation can enhance payments infrastructure and make the digital economy more efficient for all participants. 25 years ago, PayPal embarked on a journey to digitize payments and take them from offline to online. Now, we continue the journey by moving payments online to on-chain. Our customers can today buy, sell, and hold 4 types of commonly used cryptocurrencies: Bitcoin, Bitcoin Cash, Litecoin, and Ether. Our customers can also choose to check out with crypto and use crypto as a payment method with millions of merchants today. In 2023, we launched PayPal USD, or PYUSD, a fully backed, regulated stablecoin issued in the US by Paxos and developed for commerce and payments. Our objective, engaging in the digital asset space and bringing PYUSD to market, is twofold. Leverage the latest innovations to provide a faster, cheaper, stable payment instrument, and ensure that it has utility for mainstream commerce and payments. With PYUSD, consumers are able to conduct faster and cheaper transactions, send money to loved ones, buy goods and services online, and settle those transactions quickly. Businesses of all sizes can use stablecoins to enable cross-border payments, open new markets, and manage their own treasury more effectively. I would like to share 2 specific examples of how our customers are using PYUSD today. The first one is on domestic business-to-business payments. Large enterprises and SMBs rely on PayPal to securely offer fast and low-cost transfers for business-to-business payments. Today, PYUSD is available to them through more than 25 partners. It has been used, among others, by our own venture affiliate, PayPal Ventures, to fund portfolio companies during weekends and outside of banking hours. It has started to be integrated in popular enterprise resource planning systems, and we use it ourselves to conduct payments to some of our vendors today. Second, let me talk about international transfers to businesses and consumers. Stablecoins like PYUSD can enable efficiencies for cross-border payments. International payments incur in significant cost as they move through the corresponding banking network. To address that, we have enabled US customers of our Zoom product to fund millions of dollars of remittances with PYUSD at a lower cost. When a Zoom user chooses PYUSD as a funding instrument, there are no Zoom transfer fees that are incurred. In addition, on the wholesale side, we have enabled several of our disbursement partners to settle directly with us using PYUSD on the back end of transactions, reducing cost and increasing the velocity of those settlements. At every stage of our cryptocurrency journey, beginning with our buy wholesale product, the launch of crypto transfers, and the go-to-market of a stablecoin, we have been deliberate and methodical in our approach, building trust with customers, regulators, and law enforcement at each step. In terms of policy, we believe that predictable market policy is necessary for the crypto industry to grow and thrive in the United States. We recommend several policies that can help make the US a leader in this technology. First, we urge Congress to pass legislation providing stablecoin and markets and trading frameworks for the industry. Second, a state pathway is critical for the continued growth of the industry. State licensing is the approach that most crypto companies have taken, and it leverages the expertise developed over the years by the State of New York Department of Financial Services and others. Third, federal and state charters can work simultaneously under a core set of standards. In both state and federal regimes, the requirements for reserve asset management, governance, disclosures, and prudential risk management should be fit for the purpose of payments. Finally, any legislation must recognize that the business of payment stablecoin issuance is the business of payments and is not the business of banking, and that payment stablecoins are not securities. In conclusion, the current environment offers an important moment for the US to benefit from a thoughtful and proportionate legislative approach. We look forward to working with you to complete this important task. Thank you.
Thank you. Mr. Masid, you are now recognized for 5 minutes.
Chairman Style, Ranking Member Lynch, Committee Ranking Member Waters, members of the subcommittee and
Mr.
staff.
Masid, if you could just double check your mic is on. We can hear you, but the live feed may not pick you up.
Is it okay now? Okay. I'm honored to testify before you today. The views I express are my own and do not represent the views of the Harvard Kennedy School. You know, it was in 2014, under my leadership, that the CFTC declared Bitcoin a commodity. And since that time, for over 10 years, I've been calling for strengthening regulation. We hear a lot of calls for clarity, and everybody can be for that. But, you know, you can have bad rules that have clarity. We need a regulatory framework that truly encourages responsible development of this technology and not just more of the speculative activity and the abuses that we've seen far too much of to date. I'm going to focus on stablecoins. It's the most useful application of the technology to date, and I applaud the committee for prioritizing that. The Stable Act has many features I support, such as full reserves for tokens, limitations on the activities of an issuer, but there are many areas where it is deficient, and it is substantially weaker than what was negotiated between the former committee chair and the ranking member last fall, which the ranking member introduced yesterday. I want to highlight 5 issues. These are discussed, as well as others, in more detail in my testimony. First, the legislation provides for federal and state chartering, but there is far too much risk of weak state standards and an inadequate review process, and there is no ongoing federal supervision of state issuers. That's a prescription for a mess. We want people to have confidence that any stable coin is truly stable and worth $1, regardless of what state it comes from. We don't want to provide insurance for that, as we do with bank deposits, so we have to do it through sufficient national standards and supervision. Secondly, the legislation does not address the bankruptcy of a stablecoin issuer. If an issuer fails, the standard corporate bankruptcy process would likely apply. That means you've got the automatic stay, holders will not get their money quickly, and the process could take years. And there could be contagion and significant collateral damage. The legislation needs to create a dedicated resolution process that minimizes those risks. Third, I don't think it does enough to address the risks of financial crime and evasion of sanctions. It says issuers are subject to the Bank Secrecy Act. That's a good thing. But the BSA relies on centralized intermediaries. Stablecoins can be transferred and traded without going through a centralized intermediary, and they can be transferred through an intermediary that doesn't even comply with the BSA. So we need to extend the regulatory perimeter and be more creative in tackling these risks. Fourth, you know, the act is a bit like putting the lock on the barn door after the horses have left when you think about the market today, because it's not clear to me it would even have much impact on Tether. The legislation says it's unlawful to issue a stablecoin that isn't chartered, but there's no enforcement mechanism for that and no penalties. It needs to have those and an explicit territoriality provision. And finally, there are simply many ways the act doesn't give regulators enough authority and discretion, given that this could become a very significant market and it will evolve in ways we can't predict. I want to turn from stablecoins and briefly discuss decentralization and market structure. I'm pleased to see the subcommittee propose that the SEC and the CFTC work together on these issues. I've recommended joint approaches for years now. The challenge with the term decentralization and DeFi is that they're used to describe a lot of things that aren't that decentralized or that still have elements of human control and discretion. So we need to make sure key regulatory objectives like consumer protection are achieved even if in a different manner. Decentralization is also not a good criteria for distinguishing securities from commodities. And for these and other reasons, I'm strongly opposed to the FIT 21 Act. It's complex, it will generate more confusion than clarity, and could undermine our capital markets. And you know, it's snowing outside. There's often a lot of snow in this room about this issue because the notion of security versus commodity, and people say, well, a digital token can never be a security if it's not part of an investment contract. Well, if I have a digital token that represents a share of GM stock, that's a security, regardless of, how it's sold or transferred. So there are better ways to address market regulation. I discussed those in my testimony. Thank you, and I'm happy to take your questions.
Thank you very much. We'll now turn to member questions. The chair recognizes himself for 5 minutes for the purpose of asking questions. Last week during a press conference with Chairman Hill, Thompson, Scott, and Bozeman, the White House's AI and crypto czar David Sachs said the administration's committed to working with Congress on a market structure and stablecoin framework. While financial market regulators have the power to clear up some of the regulatory ambiguity related to the digital asset ecosystem, there's some obvious gaps where no regulator has jurisdiction. I want to start with you, Mr. Garrison. We'll kind of jump around, just a little rapid fire to stage set here. Can you help me describe some of those gaps and explain how the ecosystem's been impacted by them? For example, is the crypto spot market lack a clear federal regulator?
Yes, it does lack.
And is there a regulatory framework for stablecoin and stablecoin issuers?
There is not.
And is DeFi even contemplated by existing law?
It is not.
And the ambiguous legal classification of digital assets, is it security, is it commodity? That's an open question.
Correct.
Okay, so then, Mr. Garrison, in your view, what would be the outcome to the digital asset ecosystem if Congress cannot get these gaps filled? Will companies move offshore to jurisdictions with regulatory certainty or because of possible enforcement actions?
Yes, I think we see that today.
And would you agree with that, Mr. Kim?
Absolutely, Chairman. We're seeing a lot of American businesses moving offshore due to the lack of clarity in the United States.
And you see the same thing, Mr. Yaham?
Absolutely. Regulatory clarity drives investment and growth for businesses like ours.
Would you foresee the U.S. having to import regulatory standards and market practices from other countries if the United States fails to act, Mr. Garrison?
Yes, that is a likely outcome.
And do you think we're already lagging behind in this space today?
Yes, other jurisdictions, including the European Union, United Arab Emirates, and Hong Kong are further ahead.
And I want to come back to with there being no standards in the U.S. for some of these crypto companies, consumers who are trying to vet different projects, different tokens. How is that altering the market with a lack of regulatory clarity in the United States?
There's a lack of consistency in the types of disclosures that are provided and how. There's a lack of consistency in the protections that are provided to persons engaging in digital asset trading.
Let me now jump to you, Mr. Kim, and say, what if we did put in place a framework for stablecoin for the ecosystem to have a regulatory framework governing stablecoin issuances? Those stablecoin ecosystems can actually develop with established legacy financial institutions taking part?
Absolutely, Chairman. A comprehensive stablecoin framework will provide certainty and clarity to the industry, allow for U.S. innovation and leadership, and most importantly, protect consumers and investors by giving them various standards and requirements to best protect customers as well.
Mr. Fernandez de Ponte, would you agree with that?
I will. It's a strange circumstance that today the majority of dollar-denominated stablecoins are actually issued outside of the U.S., and there are many jurisdictions that are moving faster in that space. Clarity on the regime in the U.S. would enable American issuers to compete and accelerate financial innovation for the benefit of American businesses and consumers.
And if we provided that regulatory standards for stablecoins, we would be eliminating a major gap in the ecosystem. Is that accurate?
It is, yes.
Okay, so let me continue on. I'm going to come back to you, Mr. Yaham. How do you envision the digital asset ecosystem will change if a federal regulatory framework for digital asset market structure were enacted by Congress?
Well, I think in the first instance, it will allow businesses to plan and invest It will drive consistency. I think it's also important to keep the international landscape in view. Other jurisdictions have moved forward. And I think as we've seen in other financial market reforms, let's take the Dodd-Frank reforms, for example. Jurisdictions moved in different substantive directions on somewhat similar timelines. The most challenging part of those post-2008 crisis reforms were trying to rationalize cross-border market access for large infrastructure players. These turns into bilateral and geopolitical challenges. And I think we have an opportunity here to avoid those. So I think it's very important that the U.S. Puts a leadership seat at the table.
Thank you. In our final 30 seconds, with new technology, people identify potential risk. And I think we see digital asset skeptics claim that the industry is rife with fraud, with abuse. Could you just very briefly comment on how you're monitoring AML and KYC?
So Kraken invests heavily in the personnel, tools, and technology to detect and prevent illicit finance and any illicit finance being conducted on our platform. We create a very strong ecosystem where we not only monitor and KYC check everyone coming into our environment, but in terms of transactions that come in and out and off of our platform, they're subject to sanction screenings and other compliance tools.
Thank you very much. I yield back. I now recognize the gentleman from Massachusetts, Mr. Lynch, also the ranking member of the subcommittee.
Thank you, Mr. Chairman. Mr. Massad, I don't think we should overlook the lessons of the failure of Silicon Valley Bank. In that case, we had a stablecoin issuer who had a huge amount of deposits in a single bank, most of which was uninsured. Just months before the collapse of Silicon Valley Bank and Signature Bank, the Fed, the FDIC, and OCC released joint guidance cautioning banks about the volatility and vulnerability of crypto assets. The everyday American was largely insulated from the fallout of these bank failures, likely because crypto companies, likely because of the risk management systems and heightened capital reserve requirements to insulate most banks. And crypto companies had limited access to the banking sector. I have deep concerns about opening the floodgates for non-bank companies to our payment systems or offer Fed accounts. Additionally, allowing crypto companies free rein could put pensions, retirement accounts, and other typically safe investment accounts at risk. The next crypto crash could have disastrous effects on the wider economy. Mr. Massad, what additional risks should this committee consider as it crafts legislation to protect our broader economy and our traditional finance system from the volatility and instability of crypto assets? What safeguards would you recommend, especially with regard to the volatility of crypto to perhaps take down the entire financial industry?
Thank you for the question, Representative Lynch. First of all, I think with respect to the banking system, we certainly don't want banks investing in crypto on the asset side of their balance sheet, meaning, buying crypto or otherwise making investments. I think with respect to other issues like services that are for a fee, like custody or payroll services, I think assuming that we put in a good comprehensive framework on stablecoin issuers so they manage their risks, and on crypto trading platforms so they manage their risks, I think those kinds of banking services, can be done. And
having a firewall between the crypto side and traditional.
Absolutely. And, we need to address affiliations and so forth. But, your point on the concentration of deposits, that's why it's not enough for a stablecoin issuer. As the Stable Act says, you can have bank deposits, you can have all these things. It doesn't have any rules on concentration or, customer concentration. So I'm quite concerned about that. I think this all comes back to looking at this comprehensively and looking at the fact that we really don't have a regulatory framework for a lot of these crypto firms. And we've seen, a lot of fraud and manipulation and problems as a result of that. So I think it has to be done in building blocks. I applaud the committee for starting with stablecoins. I would get that piece done and then turn to the market structure issues, because those are a little more complicated. And I think we'll learn a lot by getting the stablecoin piece done.
What about the contagion piece of this, where you have banks that have access to the discount window, you have FDIC insurance, you've got, and then on the other side of the house, if you've got volatility and instability, you've got sort of co-mingling or association between various crypto companies, so that there's a domino effect that could result.
Yeah.
It actually
There clearly is.
runs into the traditional finance system.
Right. Well, two things. One, that's because of the lack of transparency about this, industry. I mean, sure, the blockchain is transparent in the sense that it's pseudonymous, but you don't know exactly what a lot of the relationships are and who's got exposure. There's a lot of leverage in the crypto industry, and we don't track that. Even in the ETF market, there's a lot
Do
of.
you think there should be a prohibition on government bailouts of crypto firms?
Certainly there should be.
Okay.
But the other thing I would comment on is, with respect to the banking sector, we really don't want banks exposed to the credit of this industry, and that's why I would limit it to sort of services that are fee based, or taking deposits that are in dollars, as long as, again, we have some concentration limits.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. The gentleman from Michigan, Mr. Huizenga, is recognized for 5 minutes.
Thank you, Chairman Style, and I do just want to extend my congratulations to you as well, becoming chairman of the Digital Assets Subcommittee and having been the former chair of the Capital Markets Subcommittee, where a lot of this issues were housed. I know this is complicated and well-deserved, though, on your part, but also congratulations to Chair Hill for seeing that we needed to break this out. I think this is a very positive thing, so I look forward to working with you all. Mr. Garrison, Mr. Yahim, let me start with you. Digital asset market participants have rightfully criticized the lack of predictability and certainty. And going back to 2019, SEC Chair Jay Clayton actually attempted to provide some clarity by releasing a framework for investment contract analysis of digital assets. But we've just seen and just exited the last 4 years, where former Chair Gensler famously told crypto firms to come in and register, whatever that meant exactly. They provided very little direction or a way for that to actually happen. Instead, it seemed that firms received was a threat of enforcement for doing so. Is it fair to say that the SEC has thus far not produced desirable or discernible standards for digital asset ecosystem that facilitate consistent application of the rules? Mr. Yahim, Mr. Garrison.
Congressman, thank you for the question. That's absolutely true. There's just been a complete lack of policy making, and it's been a regulation by enforcement regime using a decades-old jurisdictional test to try to shoehorn the diverse set of digital assets in the market into the securities laws.
And let's just be clear, regulation through enforcement is the bad thing, right?
It is a bad thing.
Okay.
And
so sometimes some of my colleagues and friends don't always see it that way. They just think that that's another tool in the toolbox, but that lack of predictability, I would think, would be very hard.
It's been in stark contrast, Congressman, to, we've watched in many major markets around the world a constructive policymaking process where jurisdictions have crafted definitions, passed legislation, passed regulation. We're in the implementation phase. It has been the exact opposite experience here in the United States.
Yeah, Mr. Garrison, I want you to answer this part. What must be done to ensure consistent guidance regarding the classification of digital assets?
So I think the SEC needs to take a deep breath and start afresh on its guidance. The 2019 guidance that you mentioned, while well-intentioned, has over 60 factors and no way to actually weigh the different factors. That's simply not actionable. There's
I think good news is Acting Chair Ueda is seemingly doing that, taking a very different approach. One of his first was to rescind the Staff Advisory Bulletin 121, SAB 121, followed by the creation of a crypto task force headed by fellow Commissioner Hester Peirce. So additionally, we've seen the SEC pause some of their pending crypto-related enforcement actions, citing a desire for potential resolution. Mr. Kim, beyond these examples, what other actions could the SEC pursue as far as low-hanging fruit to improve its approach in digital asset regulation that Congress could legislate?
Thank you very much for your question. First of all, I want to just reiterate that it's been so encouraging for the industry to have the SEC Crypto Task Force, the new SEC leadership, welcoming and willing to work with the industry. In addition to pausing or withdrawing enforcement actions based solely on registration violations without any allegations of fraud or egregious conduct, it's clarifying some of the issues that the industry has been requesting. What is a security? Clarifying and confirming that a stable coin that is backed one-to-one US dollar denominated is not a security, and just continue to work with industry. The industry wants to work with our regulators to make sure that we can enhance clarity and provide for US leadership.
I've got about a minute left. I want to try to hit a couple of quick things, but Mr. Yahim, in 2023, the SEC went after Kraken's staking program. You operate in over 200 countries, is that correct?
That's correct. Yeah.
Okay, that's a fair number. Being a member of the Foreign Affairs Committee, I know that constitutes much of the known digital world on that. But did any other regulator around the world shut you down as former Chair Gensler did?
No, Congressman. And I think, to put our global operations in context, in those jurisdictions that have advanced clear rules of the road, we've worked with regulators to put those in place, and we are regulatory compliant. There are a lot of jurisdictions that haven't, and markets operate on a solicitation basis, but most of our business is across North America and Europe, where we see regulation moving forward.
My time has expired, but I will put a question into you all about whether U.S. lawmakers should be concerned what Europe was first out of the gate with some of their regulations and their framework, and what lessons can the U.S. learn from MiCA. So with that, Mr. Chair, I yield back.
Gentleman yields back. The gentlewoman from California, Ms. Waters, who's also the ranking member of the full committee, is recognized for 5 minutes to ask questions.
Mr. Massad, consumer protections are under attack in this country, and this will have profound consequences for all of our constituents. As Elon Musk and the Trump administration try to delete the CFPB, Republicans on this committee have offered stablecoin legislation that is also light on consumer protections. In the legislation I released, there are robust protections for consumer wallets, including risk management and financial resource requirements to ensure consumers do not lose their payment stablecoins to the scams and fraud that have plagued the crypto industry for far too long. What will it mean for consumers if these protections are stripped away, as Republicans on our committee have suggested?
Well, I think you're exactly right, Congresswoman, that we could see a lot of consumer harm. Today, stablecoins aren't stable because we don't have this framework around them. And it's not enough just to say, okay, you've got to have full reserves for tokens. We do need to go beyond that. And you've noted some of the ways. And also your point about wallets, I think, is very good. We have to look at this, extend the perimeter here in terms of regulation and look at how these things are transferred. They can be transferred on self-hosted wallets, which raises a lot of issues of evasion of sanctions and financial crime. And unless we really put in a comprehensive framework, we're going to have these problems. I think the bill that the legislation that you negotiated with the former committee chair does a lot of this. It has stronger federal standards. It has standards that go to wallets. It has a dedicated resolution process. So it has a number of features, I think, that would better ensure protection of consumers.
Thank you. Days before being inaugurated, President Trump followed in the footsteps of his co-president Musk to profit off of meme coins. When Trump launched his own meme coin, I warned the speculative dangers and myriad risk for investors who would be blocked from class action lawsuits if they were swindled. Trump's profiteering also challenges critical national security and anti-corruption laws now. We're seeing reports that after Trump's token crashed, A large number of investors suffered over $2 billion in losses. According to Chainalysis data, 100 million in trading fees have gone to the Trump family and his partners, while pump and dump schemes run rampant with meme coins. It is clear that early traders, Trump's family, and their parent partners have been the biggest winners at the expense of hundreds of thousands of investors. And so when I heard about this meme coin, I asked, what is it? They said it's not an investment, it's not a contribution to the campaign. It is all about the president of the United States and then his wife and now his children all being involved in creating their own coins and making money. And those who understand what it means to have the rug pulled out from those who are unsuspecting, this appears to have happened. What do you think about this?
I think it's plainly wrong. And I don't think you need to be an expert about crypto to know that. I mean, look, this is like, paying to join a fan club, except it's a digital token that then you trade, and you buy it to trade because you hope that somewhere, someone at some time will pay more for it than you paid. It's clearly contrary to the spirit of the executive order. It's clearly a conflict of interest. It will create ongoing conflicts of interest because companies and countries may now try to buy the coin to curry favor with the administration, and they're going to continue to release additional coins. So, I think it's a black eye for digital assets. It's exactly the kind of behavior we should be trying to tamp down.
Well, just quickly, upon taking office, President Trump signed an executive order banning the creation and issuance of a U.S. central bank digital currency, also known as CBDC. The U.S. is now the only country in the world to impose a presidential ban on CBDC, while China and Europe are free to lead the global competitive landscape. I just get that in there because our central bank, why don't they want our central bank involved?
Well, if I can just add a couple thoughts to that. I mean, look, I know there's a lot of pros and cons about a retail CBDC, but we need the Federal Reserve to continue doing research and development in the area of digital assets. If you want digital assets and tokenization to really grow as a sector, then the federal payments infrastructure must be geared to handle that. And so that's why we need the Federal Reserve to continue to do work in this area. Unfortunately, the executive order suggests it can't.
The gentleman's time has
Sorry.
expired.
Thank you.
Thank you very much.
The gentleman's time has expired. The gentleman from Minnesota, Mr. Emmer, is recognized for 5 minutes.
Thank you to you, Chairman Stile, and to Chairman Hill for your tremendous leadership and partnership on digital asset legislation. I am honored to serve as the vice chairman of this subcommittee, and I'm humbled by the great work already done by your subcommittee. Under President Trump, promises made are promises kept, and a new day for crypto innovation, opportunity, and excellence has finally arrived. Crypto technology shifts economic power from centralized institutions back into the hands of the people. It's transformational. The wrong leadership, our past administration, feared this transformation. They did everything they could to kill it. The right leadership, the Trump administration, welcomes this transformation and will do everything in their power to make the United States the crypto capital of the world. For this reason, we are in a moment to drive real change, to legally anchor the digital asset community, to unlock a peer-to-peer internet with an abundance of opportunity, to be globally competitive with our regulations, to expand the status of the dollar as the world's reserve currency, and to foster in the golden age of America. Doing this requires leading with two priorities. First, we must ensure crypto policy remains nonpartisan. Republicans and Democrats have a 10-year history of working productively together on solutions in this space. That kind of teamwork must remain the status quo. Second, we must craft statutory regulations that honor the core American values that are enshrined in digital asset technology: privacy, individual sovereignty, and free market competitiveness. I'm encouraged by the strong nonpartisan coalition of members on this subcommittee and this full committee who have put up American values at the forefront of crypto policymaking. This Congress, I look forward to supporting this subcommittee as its vice chair in drafting and passing stablecoin legislation and market structure legislation. I also look forward to passing the CBDC Anti-Surveillance State Act, which bans the government from ever creating a central bank digital currency, and the Blockchain Regulatory Certainty Act, which gives entrepreneurs the legal clarity they need to innovate right here in the U.S., and the Securities Clarity Act, which codifies in law that a token is separate and distinct from an investment contract. This committee has long been at the forefront of innovative policymaking for the digital asset ecosystem. In this Congress, I'm excited to see the legislative products of our labor pass and get signed into law. Thank you again, Chairman Stile, Chairman Hill, and my colleagues across the aisle for your longstanding partnership in good faith to unlock an abundance of economic opportunity for our constituents. We have a lot of work ahead, but our constituents can trust that a great bipartisan team here in Congress will bring this across the finish line and deliver for the American people. Again, I'm honored to serve as your vice chairman, Mr. Stile, and I yield back the balance of my time.
We're honored to have you as our vice chair. We look forward to your participation. The gentleman yields back. The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Thank you, Mr. Chair, and congratulations. And thank you to our witnesses, particularly Mr. Bassett. Your testimony is really excellent. I read it twice, and I urge anyone who wants to sort of understand the issues here to have a long read on your testimony. One of the points you made in this is the inadequacy of the current corporate bankruptcy codes for resolving for stablecoin. I was wondering if the other witnesses have any comments on that. Do you view the current bankruptcy code as adequate for resolving failed stablecoins, or do you think we need a separate resolution regime for stablecoin issuers? Anyone who wants to? Just raise your hand if you think the current regime is adequate and we don't need a new one. Just raise your hand. Okay, so it looks like all of you agree that we need some kind of new resolution regime for bankrupt issuers of stablecoins. So that really should be on our to-do list on here. Let's see, Mr. Jackman, you emphasized the regulatory oversight over your platform, but as Mr. Bassett points out, that's only half the battle. You know, if you accept crypto assets that have been self-hosted, you must need some mechanism to make sure that they haven't been used for, fentanyl purchases or, or North Korean missiles, all this sort of things that are really, key to have that. Where, how do you ensure that the crypto assets that you bring on board have not been used for these illicit purposes?
Thank you for the question, Congressman. Kraken employs a zero tolerance policy for illicit finance. And if you think about our ecosystem, there is KYC, there are KYC and AML checks for every user that comes on board.
Just to be specific, let's say you've had Bitcoin that's gone through these washers and transferred to other anonymous currencies, and then it shows up in your platform from a self-hosted wallet. How do you have any idea whether that money's been?
Thank you for the question, Congressman. This is the beauty of blockchain technology, and I think this is where the blockchain analytical tools really power this ability to surveil, detect, and prevent this type of behavior. We employ these tools to ensure that not only all the transactions within our environment and on our platform are subject to these screens, but also onboard, offboard, and if we're interacting with other centralized intermediaries, self-hosted wallets that are owned by our customers, those are subject to sanctions.
They're owned by your customer. Yeah, I'm not worried about your customers, the people you KYC'd. I'm worried about people that are out there on the dark web, trading anonymously with self-hosted wallets to buy fentanyl precursors or all the things that are, killing Americans, or the North Korean nuclear missiles that threaten us. So there, it seems like, or if you have a solution to that actually works. I've been asking for it for 10 years and haven't received it. And so if you could, for the record, say exactly how you can guarantee that when you bring on a crypto asset, that value has not been used in an illicit transaction. If you could answer that for the record, I'd appreciate it, because it's one of the two things that, for one of the reasons why we've actually, over the last 10 or 12 years, passed exactly zero legislation on crypto, is that the two fundamental issues are anonymity and finality. So just, for an example on the finality, why that's so tough, if someone comes, if you're self-hosting and someone comes and puts a gun at your head, drags you into an alley, says, get out your cell phone, transfer all your crypto to me, Is it your view that you're just screwed and that's it? That money has disappeared into another self-hosted wallet, wandered off to the dark web? Or do you think that we need some way of tracking it down and find out where it went?
Well, Congressman, I think it's really important to put the market into context here. The crypto markets have reached over $3.5 trillion. 85 to 90% of that activity today goes through centralized intermediaries like Kraken and
It's
other.
the 15% that is threatening us with nuclear missiles we cannot stop from North Korea. All right. I'm not worried about the 85%, and I'm not even, anyway. So if you have a solution.
Well, Congressman, if I may, I think the 85 to 90% is what we're here to talk about today. That is why it is so important for the United States to move forward with market structure regulation. If we can, there are many issues to debate over the next several years, but we need to move now and put that basic foundation in place.
Okay,
like
unless
other major
the
jurisdictions have.
85% is used as an on-ramp for the 15% that's killing Americans. Yeah, Mr. Massad, you look like you wanted to say something.
Well, I was just going to say, when I hear the industry defend it this way, and yet at the same time they want to promote DeFi. So you might say, well, okay, are you willing to somehow restrict DeFi and have everything go through centralized intermediaries so we can have BSA checks?
Thank you. My time's up. Yield back.
The gentleman yields back. The gentleman from Ohio, Mr. Davidson, who's also the chair of the Subcommittee on National Security, Illicit Finance, and International Financial Institutions, is now recognized for 5 minutes.
Thank you, Chairman, for holding today's hearing, A Golden Age of Digital Assets. Given the title, I think I'll get a question in at least on gold-backed stablecoins. But I want to strongly support legislation that provides legal clarity for payment stablecoins. First, traditional stablecoins are priced at $1 per token, and they are backed by custody of $1 of either cash or cash equivalents like U.S. Treasuries. As the name implies, a gold-backed stablecoin is backed by physical custody of gold. Consequently, with a claim to the gold that's on deposit, each token reflects the market price of gold. Similar commodity-backed stablecoins are obviously viable, but why would anyone prefer a stablecoin of any kind to a traditional bank deposit? Well, first, banks have fractional reserves, and although the risk of a bank default is normally small, cases like Silicon Valley Bank exist. Stablecoins are fully reserved, and they have audited balances of 1-to-1. In the case of dollars, it's $1 per dollar, or in the case of something like gold, it'd be 1 ounce per token. The other thing is self-custody. So while the skeptics keep trying to undermine the market, the whole point is self-custody, permissionless, which is no intermediary payments. And the idea that you have to go through an intermediary to be trusted basically says that unless the government grants you permission, we just assume you're a criminal, that you're trying to do everything that we want to criminalize. And there is no decentralized finance without the decentralized part. If you don't protect self-custody, you essentially don't have, all you really do is change which intermediaries are involved. You don't really do that much truly interesting work. So I don't think any serious piece of legislation to try to chart a path for a, quote, golden age of digital assets could possibly exclude serious protections for self-custody. And I was really pleased to hear you highlight that, Mr. Kim. So, Mr. Yakum, Kraken lists some advantages of gold-backed stablecoins. You obviously have them available. Do you agree that there are advantages to using a gold-backed stablecoin to other stablecoins?
Thank you for the question, Congressman. And to touch on your prior point, thank you for your leadership in terms of helping others understand the importance of self-custody in the crypto markets. With respect to stablecoins, we believe a robust and healthy and competitive stablecoin market is going to be important. We've seen instances where the market, either due to regulation or other forces, has been dominated by a couple players. But again, in Europe, let's look to this example. We've seen the emergence as rules have been put in place, new issuers register, and competitive forces at play. And I think that's what we all want for the market. So this includes gold-backed stablecoins. I think there's going to be a lot of innovation in this space, but it's important for the U.S. to put rules in place for issuers. Right now, we see other jurisdictions moving forward, which is requiring every global stablecoin issuer to consider registration in one jurisdiction or another.
Yeah,
And,
I think it's a good point. I mean, I think the big thing the committees try to do, and we had witnesses, including Director Harris from New York, man, we've had legal clarity in America for years now. We just haven't made it federal. And so some people want to make it only federal and essentially nuke what's worked successfully with a regulatory regime in New York. And look, New York rarely gets regulatory frameworks right in a way that I will applaud, but this is one that seems to have been pretty effective. A lot of times it seems very heavy-handed, but this seems to have worked. And we've got people that don't want to recognize that and basically want to eliminate the state-backed stablecoin path. One of the other things that we talked about was, legal clarity. One of the first bills I introduced in this space was the Token Taxonomy Act, and it gets at this idea that there has to be a bright line test. I'm going to rapidly run out of time, but Mr. Mossad, is there any place that really doesn't look like a Jackson Pollock painting? I mean, that everyone looks at it and says, this is really a bright line test. This is a security and this is not.
Congressman, thank you for the question. It's very tough, but I think we need to remember that other jurisdictions are struggling with this security versus commodity or security versus something else also. Europe has this too. It's whether it's a crypto asset or a financial instrument. The difference is they have in some of these other jurisdictions, because this also exists in Hong Kong and other places, they have more unitary regulation. So it's a little bit easier to.
Well, it is the challenge before us, and we have to get a bright line. I'm sure others will highlight it. Sadly, my time's expired.
If I can just add, though, on New York, if all 50 states follow New York,
time has expired. The
I'm
gentleman's
fine with
time
the
has
state
expired. You can enter it for the record. The gentleman's time has expired. The representative from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Thank you to our witnesses for joining us today. There's so much excitement around digital assets, especially cryptocurrency, understandably so. Cryptocurrency is the new thing. It's shiny, it's flashy. People on the internet are always telling stories about how much money they're making on their investments in the latest coin. But the stories that stick with me the most are not on social media posts. They're the ones that I hear in community or that come to my office as casework, like the college student whose digital wallet was drained and they don't know who to turn to for help, or the elder who lost everything when responding to text messages from a number that was pretending to be their grandchild in order to set up a crypto access account. These stories and many more are the heartbreaking reality of crypto scams, and I believe we all, government and industry, should do everything we can to stop them. Mr. Kim, you are the president and acting CEO of Crypto Council for Innovation. Do you think it is important for government to play a role in reducing scamming and fraudulent activity through cryptocurrency?
Thank you very much for your question, Congresswoman. As a general matter, it's extremely important for any counter illicit activity to be stopped. NCCI is committed to coming up with policy solutions. My opinion is that the best way to accomplish this is through a comprehensive federal framework for both market structure and payment stablecoins to make sure there are consumer disclosures, that there are consumer protection standards, and all of this information can help prevent scam. At CCI, we run different types of educational aware campaigns with our members to make sure these types of scams do not come to be. In the US, centralized exchanges, as my colleague to the right of me mentioned, they are subject to robust AML-CFT oversight, but no amount of counter illicit activity is acceptable. And CCI is committed to working with you and your office to making sure that we promote awareness and education to best stop consumer scams.
Thank you. My next question is for the entire panel of witnesses. So please raise your hand if you oppose crypto scams and support protecting consumers. Excellent. Let the record reflect that every single witness today raised their hand. I'm glad we can all agree on that, but it's not enough to simply talk about it. We need to be about it. And that's why I want to bring attention to the Consumer Financial Protection Bureau. This small but mighty government agency is one of the top watchdogs fighting hard for working class people and their bank accounts. And that's precisely the reason Elon Musk is trying to kill it. If you're not familiar, the CFPB has put $21 billion, that's with a B, dollars back in people's pockets. And when it comes to digital assets, CFPB collected data from consumers and found that 40% of crypto asset complaints were about fraud and scams. They then use that information to develop resources for consumers and prioritize regulations for crypto firms to reduce predatory behavior. But the agency is now under attack. Elon Musk and his so-called Doge Bros have kicked out the employees, locked the door, and stopped all the work from continuing. They did it with the blessing of our scammer and harmer in chief, Donald Trump. Earlier this year, Trump launched his own cryptocurrency meme coin. He promoted it on social media and people invested in it, but then it quickly lost value, roughly 40%, when Trump insiders pulled their money for a profit, resulting in working class people stuck with the losses. It was a scam. So let's be clear. On one hand, Donald Trump will steal from people through a crypto scam. On the other hand, the hardworking staff at CFPB will fight to get people their money back. And that's why we need this essential agency to be reopened to finish its necessary work. Mr. Massad, the Consumer Protection Financial Bureau, before it was attacked by Elon Musk and Doge, proposed that crypto payments are subject to the Electronic Fund Transfer Act. Why do you think that is important?
Well, I think, Congresswoman, thank you for the question. I think we have to have a complete framework of regulation, and particularly given the fact that the industry likes to push back against whatever regulator is trying to do something. And to your point about shutting down the CFPB, we cannot build strong financial markets if we're going to sort of regulate by a pendulum swing, sort of go way over here, one administration, then go way over here, the other administration. I mean, reasonable people can disagree with some of their rules, but you don't shut down the agency.
Thank you. I yield back.
The gentlewoman yields back. All members are reminded to refrain from engaging in personalities towards the president. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Stile, and thank you, Ranking Member Lynch, for holding this hearing, and thank you to our witnesses for taking time to be with us today. One aspect of stablecoins that interests me greatly is their utilization for business-to-business transactions. Mr. DePonte, why are stablecoins a better tool than traditional settlement rails for domestic business-to-business transactions?
Thank you so much for the question. We have been active in the space of crypto for the last 5 years and in the stable coins for the last year and a half. And the reason that we are there is because we are a payments company, not a blockchain company. We see the potential of the technology to bring the next generation of payment rails. And we believe that business-to-business payments is one of the places where we will see that adoption first. In terms of domestic payments, there is a very clear advantage that even in places that have adopted real-time payments in more traditional rails, through the transactions with the stablecoins on blockchain, businesses can transact outside of banking hours, outside of Monday to Friday, outside of 9 to 5. We see that for many small businesses that we serve, that means that they can get their payments in 2 days earlier. They can get their payments in without waiting for an ACH transfer to settle. We see fundamental advantages in reducing financial costs for those businesses.
Thank you. And recently I had a constituent express a great deal of frustration regarding the cost and difficulty of conducting an international wire transfer to pay an invoice. Mr. DePonte, do you see similar benefits when stable coins are used for international cross-border payments between businesses?
Thank you so much for the question. If there is value on the domestic side, there is even more value on the international side. The cost of sending an international wire is in the range of $50. The time that it takes to settle is in the range of 3 to 5 days. And there might be other costs associated for the receiving party internationally. When we can do transactions that are fast and cheap, and they can settle 24/7, and they can settle in minutes, we are saving those businesses at least in 3 ways. We are putting 5 days of money back on their balance sheet because they don't need to pre-fund the money. In many cases, they can get better exchange rates because they can time when they do the transaction. And they are also reducing the counterparty risk because they don't need to have pre-funded money with their disbursement partners. I have the luxury of being able to engage with our consumers and businesses. And I remember a few weeks ago, I was talking to one of our small businesses, a pottery business out of Texas, who was very clear that the main reason that she was excited about this technology was not the need to reduce the cost of payments, but to grow her business. And she shared that very really, she had to decline a significant order from overseas, from the Middle East, because they could not figure out the way to make the payment. So if we can provide this fast and cheap and 24/7 settlement vehicle, we will be helping her grow her business and millions of other American businesses.
Thank you. I think you shed great light on that. I'd like to shift gears now and discuss the benefits that stablecoins offer to consumers, not just businesses. Mr. Kim, I understand that traditional financial institutions charge 5 to 12% for remittances. How can stablecoins be used to lower those costs for consumers looking to make remittance payments?
Thank you very much for this important question, Congressman. You're absolutely right. Traditional institutions can charge anywhere from 5 to 12% for cross-border remittances. Stablecoins can reduce that to 1% or lower. I'm from New York. In New York, New Yorkers send $10 billion overseas on remittances. We're talking about $500 million that could be spent on the local economy and other good reasons. And this is why it's so important to have a comprehensive federal framework for stablecoins to further spur this innovation and leadership in the United States when it comes to stablecoins, Congressman.
Thank you. I fear that a lack of strong communication between the CFTC and the Securities and Exchange Commission has been why the Biden-Harris administration was so unsuccessful in appropriately regulating digital assets. Mr. Kim, would you be supportive of a joint advisory commission between the SEC and the CFTC to help harmonize them and resolve the jurisdictional overlap?
Absolutely, Congressman. Interagency collaboration and cooperation is critical to getting this right for the United States. We need clear delineation of responsibilities between two agencies, and this is something that the President's executive order also recognized by establishing the working group. And I want to thank you, Congressman, for your leadership with the Bridge Act as well.
Thank you. And I have full faith that this Congress, we will pass legislation regarding both stablecoins and market structure for digital assets. And as we blaze a path forward, it cannot be done without cooperation and communication between the SEC and the CFTC. Thank you, Mr. Chairman. I yield back.
The gentleman yields back. The representative from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. I feel we in Congress should neither romanticize nor demonize emerging technologies like blockchain. Like all technologies, blockchain has constructive uses and destructive uses, and I feel like our mission should be to develop a regulatory framework that maximizes the best uses and minimizes the worst uses. Because without a bipartisan agreement, we will continue to have a dangerously deregulated status quo that benefits offshore, over-leveraged, deregulated actors. And for me, a bipartisan agreement would be a fundamental improvement upon the status quo. I want to follow up on Congressman Rose's questions on remittances. I represent the Bronx, which is one of the poorest counties in America. I have constituents who pay exorbitant fees simply to transfer their own money to their loved ones abroad, whether it be Mexico or the Dominican Republic. My first question would be for Mr. Ponte. PayPal is obviously one of the largest payment processors in the world. What is the cost of transferring money via the conventional payment system versus the crypto or stablecoin payment system?
Thank you for the question, Congressman. The cost of sending money overseas varies widely by corridor, but information coming from sources like the World Bank would put the average cost in the range of around 6%, with a target of, I think that the desired target for the World Bank is to bring that down to 3%. But the current average, I think, is in the range of 6%. When you're doing those transactions on stablecoins today, if you're doing that purely from a stablecoin wallet to a stablecoin wallet, depending on the protocol that you're using, it can be as low as 1 cent per transaction in some of the most efficient wallets. That still would not address part of the complexity, because then you would need to explain to the person on the other side, they need to get a crypto wallet, they need to find an exchange. So there is still some friction there. But we are finding experiences that combine fiat and stablecoins for the benefit of the user. For instance,
I just want to simplify it. So the average cost of remittances is 6%. The World Bank has a sustainability development goal of 3%. What is your cost with stablecoin?
When somebody on Zoom, our remittance product, we have enabled stablecoin as a funding instrument. When somebody sends a remittance funded by POUSD, we don't charge any transfer fees. So the transfer fee that is charged to the user is zero. There is still a component on the Forex spread, depending on where that corridor goes.
Okay, so it's zero when it comes to the transaction fees, and then if you factor in the spread for the foreign currency exchange rate, what would it be?
That would vary. I would need to come back to you for follow-up.
Is it less than 3%?
In many cases, it will be less than 3%.
we're living in a time when foreign demand for U.S. stablecoins is on the, I'm sorry, foreign demands for U.S. treasuries is on the decline. And it appears to me that stablecoin issuers are becoming the largest purchaser of U.S. treasuries. It would seem to me that the proliferation of stablecoins can dramatically expand the market for U.S. treasuries. What impact would that have on the cost of U.S. debt?
Thank you, Congressman, for the question. U.S. Treasuries are definitely being established as one of the assets that are being preferred for reserves of stablecoin. And as the market grows, that will undoubtedly drive demand, especially as American issuers are able to issue more here inside of the U.S. and they're able to ride that increase in the market. I don't have an opinion on what that would make for the cost of debt of the United States, but definitely is one of the aspects where net demand for treasuries could grow.
Or it seems to me economics would dictate that growing demand for U.S. treasuries would lower the cost of U.S. debt. But, Mr. Massad, do you feel stablecoins should be regulated in the same manner as banks?
Well, not quite in the same manner, but with some similar principles, such as some of those in the Stable Act, like full reserves and capital and liquidity requirements, risk management measures, and so forth. I mean, I've been calling for this for years because not just to address the
You would
risks,
concede that, a stablecoin issuer that has no fractionalization of reserves and no
Correct.
lending function
Agreed. They're
is
not creating money.
qualitatively different from a bank,
they're not creating money.
and
I
therefore
would
should
agree
have
with
its own regulatory framework.
Absolutely.
I see my time is about to expire, so I will leave it at that. Thank you.
The gentleman yields back. The chair now recognizes the chair of the full committee, the gentleman from Arkansas, Mr. Hill.
Thank you, Chairman Stahl, and thank you for your leadership of our important work in the 119th Congress on digital assets. Appreciate the questions of my fellow committee members and appreciate all the witnesses being with us today. Mr. Garrison, today's investors make investments in digital asset projects through a series of exemptions that the SEC has crafted, each with their own advantages and limitations. Could you take a minute and discuss the different exemptions that digital asset projects are currently using to raise money with investors and what the principal obstacles are to that process?
Certainly, the primary exemption that most digital asset issuers rely on is Regulation S, which is a safe harbor for offshore transactions to prevent U.S. investors from even participating. So as a starting point, many U.S. investors are just kept out. For those that do issue to U.S. investors, you typically do so through the Regulation D safe harbor, which can only be sold to wealthy investors. So you have to have over $200,000 in income or $1 million net worth to participate in that. So in the U.S., there really is no straightforward way to get digital assets out to retail investors in a either registered or exempt offering.
Yeah, so that's helpful to me because this is, what I think the ecosystem has to understand is that not all these needed activities can be taken care of by the commission by itself without Congress. So what would be in your view, the key features of a workable exemption type system that SEC could add to that without Congress?
Certainly. So the SEC could use its exemptive authority to add a new exemption similar to Commissioner Peirce's token safe harbor proposals from a few years ago, for example. So a few features that it could be helpful there is the ability to access retail investors, as well as tailored disclosure items for this industry, right? So token holders have different interests than a shareholder in a company. The types of disclosures that are needed are completely different in this situation.
Yeah.
So providing that type of information, and you can pair that with many investor protections, individual limitations on how many people can participate, how much they can participate of their net worth. Many of the same concepts in existing securities law exemptions can be grafted over in a way that makes it a balanced approach.
Thank you. I think we've worked certainly with that concept as we've drafted our FIT 21 bill in the last Congress. Bitcoin clearly is the most popular digital asset in the ecosystem. And it's one example where both the SEC and the CFTC have agreed that it's not a security along with Ether. Do you think under the current securities laws, it would be possible for a national securities exchange to list Bitcoin and a security alongside each other? Is that possible, you think, under current?
No, it is not.
Not? You don't believe it is? Mr. Yahim, you agree with that? You think?
I think Congressman, thank you for the question. I think there could be exemptions put in place. It's our view that rather than do this piece by piece through exemptive relief or no action, from the agency, it's really important for Congress to set a clear statutory framework and do that across both agencies. We've seen prior examples where markets have dual registrations at the SEC and CFTC. And the fact of the matter is the rest of the developed world and most other emerging jurisdictions have just called these crypto assets. You have one regulator, one registration framework, we have to work within our unique legal system, but I think in order for our framework to be durable and keep pace with the innovation, the tests and the jurisdictional lines need to be clear and simple.
Mr. Garrison, you agree with that?
Yes, there's without a doubt a need for clear jurisdictional lines and clarity.
You've advocated for a joint SRO to oversee digital assets as a convenient way to sort of sidestep these questions. Still advocating for that? Mr. Garrison?
I'm sorry, clarification for a joint SRO to oversee SEC and CFTC trading?
Yeah.
I think that could potentially work great. Any type of communication between the two agencies and coordination on regulations would make sense.
Time's expired, Mr. Chairman. I yield back.
Gentleman yields back. The representative from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to all the witnesses. I want to do some follow-up to the questions that Mr. Torres was asking with you, Mr. Del Ponte. The crypto industry has always boasted about the easier access and the savings of using crypto or stable coins in lieu of remittances. And they talk about all these prices, but the reality is, do we have that many migrants using crypto or stable coins to transmit remittances?
There are thank you for the question so much. The use of remittances, the use of stable coins broadly for remittances or for other type of payments is still on the early stages. The vast majority of the use case for stable coins today, where stable coins have been adopted, is mostly on crypto and trading markets. We see some early stages in which both consumers and businesses are using that for cross-border P2P, payments or for business-to-business payments, but it's still in very early
What percent of remittances today do you think are used or are being transmitted with crypto or stable coins?
I don't have data for that, but my best estimate would be that it's going to be in the low single digits. It's still a very small amount.
It's very small, right? Because frankly, at least when I still remember the first hearing we had on this topic, and I questioned the witness at the time, and he too could not give me a single instant where it's said and done, because it's a practical matter. Yes, it may be easier to transmit, but the receiving party has to have the capacity to receive it. It's not something you can just go to the market and buy your milk. Likewise, do you have any data on the breakdown by income of the buyer, customer, consumer, the investor that does use stablecoin or does invest in stablecoin or crypto?
I don't know that we have that data, but I can consult with our team.
Well, again, it's a question that I've been asking now, it seems like for 5 years, and no one seems to be able to answer that question. Even some of these working groups that are put together and experts come, and you all like to talk about how inclusive this can be and that this will help the unbanked, and it's laudable goals. But the reality is, unless you're really very rich, you're not doing any of this. And the average American just seems to be overwhelmed with this discussion that they don't really even understand what we're talking about. that I think it's going to be really hard for us to get past some of those hurdles. And when you talk about the underbanked, those with limited English proficiency, I think there's a lot of dubious people about what this really means. We know cash. Cash is king. And we really don't want, at least in my district, anybody competing with the US dollar. And I think there's a big hurdle here that we have to use, but we also got to make sure that whatever we're doing, that we do have a framework to protect the consumer, and that we can make sure that they also have remedies for justice if they get scammed, as Ms. Presley mentioned. So, Mr. Massey, do you think the government-wide mandate to eliminate diversity, equity, and inclusion efforts will change the crypto industry in the long run?
That's a good question, Congresswoman. I'm sure it will. I think it's very unfortunate to eliminate these programs entirely, even if you can find examples of how they've been used that you think are an overreach. The notion that we should eliminate these things, I think, is not good policy. Again,
well, it's part of the branding of this industry from the beginning. And as I said, we'll be there for the unbanked, for the poor person, to send a remittance for everybody.
Well,
We'll include everybody. We're not going to be like the banks.
Well, no, I agree with you that the industry likes to talk about inclusion. I don't think we've seen that much of that. And to your question about stablecoins, who's using them for remittances and so forth, we might see that use case develop. The fact is, stablecoins are mostly used today for trading crypto. Now, if we had a regulatory framework with sufficient protections that people could have confidence that a stablecoin was really worth $1, then we might see people use remittances. And I agree with Mr. Delaponte that the cost of remittances is very, very high, and we should be looking for ways to bring it down. There are other companies trying to bring it down through non-blockchain technologies, and they're making progress in that regard.
Thank you. I yield back.
The gentleman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank the witnesses for being with us today. Over the past 4 years, under the Biden administration and Chair Gensler, innovation within the digital asset sector has been driven out of the United States. Numerous groundbreaking blockchain companies with potential to transform our economy have relocated to jurisdictions with well-established regulatory frameworks. Meanwhile, international competitors have gained a distinct competitive advantage, while American businesses in this space were essentially dismissed by the administration with the message to simply go away. Mr. Fernandez-Duponte, as an American company, how has PayPal's digital currency business been affected by the absence of regulatory certainty over the past several years?
Thank you so much for the question. We have been in industry, we have been in the payments industry for 25 years, and we are regulated in many, many jurisdictions, and we take that regulation very seriously. So when we decided that we were going to enter the space, we went to the highest regulatory standards that we could go. We obtained the first provisional bid license in New York. We obtained the first upgrade for a full bid licensing in New York. And we obtain a limited purpose trust charter out of New York as well. So we have gone the state route in the place in which the regulation was available to us and where we could interact with the system. Definitely, there are constraints on how products are designed that derive from that lack of clarity and that lack of understanding of when one specific token would be considered a security or not. We support a very small number of tokens in our platform, and are mainly driven by utility.
Quick follow-up question. How could clear legal guidelines for digital assets and blockchain technology help non-bank entities like PayPal compete more effectively on the global stage?
We believe that as the world moves to the next generation of payment rails, it is incredibly important for a payment company like us to be involved. As the world moves toward mobile money wallets internationally and toward networks that will interoperate in each other, we see an increasing volume that is going into those rails, and we need to have an ability to compete in that international market because it is happening outside of the US before it's happening in the US.
Thank you for that. Mr. Yahem, how about for Kraken? What would your answer be? How would clear legal guidelines help assist competitiveness of the US economy?
Thank you for the question, Congressman. The clarity needed and provided by the legislation that's advanced over multiple congressional cycles, I think would solve for a key foundational piece of this puzzle, which is regulation for centralized intermediaries. That will allow investment and growth. Now, if you look at the trend that's happened here, both at the level of the project development teams and the innovators, through to the investing community, and then to the centralized markets, we have lacked that clarity in the United States, which has pushed innovation and pushed development offshore. And, it's not just the legal bills. It is the distraction of management and board and our businesses to think proactively about investing. So we're very excited for the change in tone and the cooperation, and we think that's going to drive new innovation here in the U.S.
Thank you for that. I can assure you help is on the way. Last Congress, I introduced the New Frontier and Technology Act with my colleague from New York, Mr. Torres. The aim of that bill is to provide clear definitions within the expanding and often ambiguous digital assets regulatory landscape. As you may note, non-fungible token creators and marketplaces have faced challenges for years due to unclear regulations, while countries like Japan, Singapore, and South Korea have created favorable conditions that have allowed NFT companies to thrive. I was encouraged to see a discussion draft of my bill included in today's hearing, and I look forward to advancing this important work later in this Congress. Mr. Kim, can you describe some of the regulatory ambiguity regarding the treatment of NFTs and explain why these assets need to be approached in a different manner than, say, Bitcoin or Ethereum?
Absolutely. Thank you for your question, Congressman. It's important to clarify the non-security status for NFTs, such as artwork, collectibles, and non-financial applications. Imagine an artist looking to hire a securities attorney, apologies to my colleague to the left of me, before selling this art piece. And this is why your bill is so important. Thank you to you and Congressman Torres for your leadership there to clarify this important issue.
Thank you for that. I'm particularly interested to see how NFTs can revolutionize various sectors, but particularly real estate. I think there's a lot of efficiencies long-term that we can use the blockchain, and this legislation would help go a long way in that endeavor. Congress has an obligation to make sure the U.S. economy is the best place in the world to start and build a business, and that's what we're working on in this subcommittee, and I'm optimistic we'll get it done this Congress. Thank you. I yield back.
Gentleman yields back. The representative from California, Mr. Liccardo, is recognized for 5 minutes. Maybe you're able to pull the mic over
Here.
next to you.
Thank you. My mistake. Wrong button. Thank you. And thank you, Mr. Chairman. Congratulations as well. I appreciate the testimony of the witnesses. Thank you all for being here. And I hope that we do move a stablecoin bill out with some bipartisan support. And I appreciate the hard work that's been done on all sides. And I also particularly appreciate our ranking member's work late last year to try to achieve a compromise, which I think was a good bill. I am interested, and perhaps I'll start with you, Mr. Fernandez de Ponte, since your company is a well-known national brand, even to those who are not familiar with crypto, and you happen to be headquartered in a great American city of San Jose. I wanted to ask, given the focus that you have and your company has on having a stable payment system, in your testimony, you wrote on page 5 that regular and predictable market policy is necessary for the crypto industry to grow and thrive, and that's certainly understandable. And you clearly support state regulation, an option for state regulation. But I noticed that you also encouraged that there be uniform standards, for example, around reserve requirements, around risk management, governance. So then, do you share the concern that Mr. Mossad has that there ought to be some federal regulation or oversight over what the standards ought to be if we're going to have state chartered stablecoin?
Thank you, Congressman, and thank you for your leadership in our home city, and it's a great city indeed, San Jose. Yes, we advocate for the need for legislation, and we advocate for a state path. The reason that we advocate for a state path is that when we look at it from our perspective, we're a payments company. and payments are regulated at the state level. And we strongly believe that fully backed, fiat-backed, one-to-one reserve stablecoins are, and issuance of those payment stablecoins is the business of payments, not the business of banking or fractional reserve, all the points that were made here. So we do believe that it is important to maintain a state path. I think that the point on standards is that a state path can coexist with a federal path. We see the advantages of having a federal path as well. We do believe that there should be that general set of standards. That is important that we have equiparable standards in terms of reserve management between any federal path and any state path. We also believe that it's important to not have a duplicity of regulation. So this idea that they can coexist and share common standards, we think is an important one.
Thank you very much. Mr. Joachim, do you also agree that there ought to be some baseline standards set, even if there's a state charter, stablecoin?
Absolutely, Congressman. Thank you for the question. I think, if you look at in the stablecoin space, again, with the goal of encouraging a healthy, vibrant, competitive stablecoin market, both state and federal pathways are important, and there should be minimum standards set. I think, from our standpoint as a centralized intermediary, it's slightly different. And if you look at how markets are regulated in traditional markets, whether it's derivatives or equities, a unified federal framework is essential. Today, we operate with over 40 state money transmission licenses. There are only a handful of states that have put in place crypto-focused regulations for centralized intermediaries. So we believe it's imperative to advance and finalize as soon as possible the market structure bill, which puts a clear federal framework in place for exchanges like us.
And then going to Mr. Massad's concerns about, on the Stable Act, about extraterritorial enforcement. Shouldn't we give the Attorney General the authority to enforce and explicitly ensure there's extraterritorial application? Since we clearly have many of these entities are abroad. Mr. Joachim?
Well, I think it's important, first and foremost, to get a stablecoin bill done. In terms of the cooperation and international cooperation with other jurisdictions, I think that's the most important first step. We've seen stablecoin rules finalized in the European Union. And we've seen the results of those stablecoin rules now go into effect. In fact, those stablecoins that have not taken steps to register as issuers and bring themselves within the regulatory perimeter are being delisted from major exchanges. And I think, again, that is just a case in point of why it's so important to move this forward as quickly as possible.
Thank you. I yield.
Gentleman yields back. The representative from Indiana, Mr. Stutzman, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the panel for being here today. I think this has been a very informative hearing, and one that obviously I'm excited about the future. And obviously a lot is happening. I served 8 years ago, and I remember when this committee had its first hearing on cryptocurrency back in 2014, and Mr. Heisinger was the chairman of the committee. Well, fast forward to 2025, and this House has taken substantial steps regarding a federal framework for how digital assets can be incorporated into our financial ecosystem. Despite the substantial work my colleagues have done on market structure, we saw an administration over the last 4 years that chose regulation by enforcement over permanent statute. The Biden administration engaged in all-out assault on digital asset firms, token issuers, and blockchain developers. Furthermore, the SEC and the CFTC were in a turf war over their jurisdictions over these tokens, and it's my understanding that there was a lot of confusion that resulted in a lack of unity and regulation by enforcement, which harmed emerging technologies and U.S. supremacy in digital asset technology. So while the confusion, since the Trump administration, thankfully, has taken over, Commissioner Pierce has unveiled a 10-point action plan for the SEC's new crypto task force. And I would just share with my colleagues on the other side of the aisle that it's a really good read, and I would encourage you all to read it. one of the points that the commissioner makes is where Congress has directed the commission to impose requirements on market participants. SEC rules will not let you do whatever you want, whenever you want, however you want. Some of these rules will impose cost and others compliance burdens that some may find irritating, and the commission will use its enforcement tools when necessary to pursue noncompliance. Goes on to talk about the direction that he's going, and then of course list off 10 different directives or plans of action. And Mr. Garrison, and I would offer to anybody else if they would like, if you could briefly summarize some of the most important points in the action plan and explain some of the impact that you think that they will have on digital assets if they're accomplished.
Certainly. So the first two priorities I think are incredibly important. The first is clarifying the status of digital assets under the securities laws, as well as the second, scoping out activities that are outside the scope of federal securities laws. And I think that really is the foundational question that the SEC has to tackle, creating a very clear interpretation of how the SEC views when a digital asset that is sold pursuant to an investment contract fits under the securities laws. Everything else flows from that. Another maybe bucket I would say for the 10 priorities is writing rules and providing guidance on how regulated intermediaries by the SEC can touch digital assets. Now that would apply both in the context of digital assets that are not securities, as well as digital assets that are securities, like a tokenized stock. Providing a clear pathway for broker-dealers, investment advisors, clearing agencies, transfer agents to be able to engage will really allow the ecosystem to flourish, will allow it to do so under a regulated way and in a way that is compliant and safe.
Anybody else like to comment quickly?
Yeah, if I could, I think it's a very thoughtful plan. I have great respect for Commissioner Peirce and Acting Chair Ueda. And I think given that and given the legislation that you all have noticed to create a joint committee, I would urge you to let the commissions work on this for a while and get stablecoin legislation in place. Let's learn from that, but not rush on market structure, because I think we could easily screw things up through the market structure legislation more than help.
Thank you. I've got 45 seconds. Anybody else want to comment?
Yeah, just very briefly, Congressman. I think, again, at the risk of repeating myself, this just reflects the new SEC leadership and administration, which wants to work with industry, which is extremely encouraging. And I think it was Mr. Garrison's written testimony where he had a great line, which said, the industry is not looking for special treatment, just fair treatment. So we look forward to working with the task force on next steps.
Okay.
Congressman, if I may add, one subject that hasn't been mentioned is clarity around staking, which Commissioner Peirce does outline in that plan. We think it is a very important part of the ecosystem. It's a lesser known component, but it is unique to the crypto ecosystem. So it's something we're looking forward to getting regulatory clarity here in the United States.
My time's expired, but I would be curious, at some point, somehow, just some specific elements from successful regulatory frameworks that other jurisdictions have, what you all would recommend would be something that we keep in mind. So thank you. I yield back.
Gentleman yields back. The gentleman from California, Mr. Sherman, is recognized for 5 minutes.
The ranking member made it, I think, demonstrated how the Trump coin was pumped up to $75 and now dumped down to $17, and chiefly was owned by 40 wallets, could be only one family, could be the Trump family. It's called the Trump coin. But I want to focus on Dogecoin. On November 5th, everybody knew that election was going to be good for crypto. And Bitcoin went up 22%. One coin, Dogecoin, went up in 1 week 6 times as fast as Bitcoin. And then, after 1 week, they named a big time department after the coin. And the coin still uses the dog as its emblem. So somebody knew for a week that as long as Trump had been elected, there would be this new entity called Doge, and that would popularize the coin, drive its price up. Now, I don't know who would have known that this new commission would be called Doge. I don't know whether Mr. Musk or Mr. Trump knew, but they did give it the name exactly 1 week after the election. Mr. Massad, assuming that Dogecoin isn't a security, is it subject to insider trading laws?
No, it is not.
So by arguing that it's not a security, you can engage in knowing a week in advance that it's going to be popularized through a government action, creating a well-known and very popular commission, trade on that, make a lot of money, and they say that Musk isn't smart. I'll point out that Trump used to, has just recently threatened the BRICS countries if they dare try to compete with the US dollar while favoring the crypto bros who have announced that the purpose is competing with the US dollar, all while trying to pass laws preventing a central bank digital currency because that will allow the dollar to compete with crypto. But I want to focus a little bit on stablecoin. Most stablecoins are tied to the US dollar. So say we're thinking about one of those. Now, so the question is, how's a stablecoin different from a money market mutual fund? Now, it's cooler because it's called a coin. And being a cool thing, it can dream of a functionality it doesn't have, just as my Ford Fusion is dreaming of self-driving. But in terms of current functionality and putting aside just how cool it is to tell people you don't have a money market fund, you got a Bitcoin, you've got a stable coin. What does a stable coin tied to the US dollar offer the investor that old-fashioned boring mutual funds, the money market funds don't offer?
Well, thank you for the question, Congressman. I think the way I think about stablecoins is they should not be an investment vehicle. They should not pay interest. And
not even the little bit of interest I get on my money market
not to start out with. I think we're better off,
So it's
restricting them.
worse
So they're
than a
a
money market
payment
fund. My money market fund is absolutely stable, strongly regulated, and pays little interest. And you're talking about a stable coin that may or may not be stable and would pay no interest at all. So what's the advantage that it has, assuming I'm not trying to avoid the anti-money laundering statutes, assuming I'm not a tax evader, I'm not hiding money from my spouse?
I think it's
what advantage does it have?
I think it's the potential that the technology does provide certain cost savings in terms of how these can be moved.
In some day in the, but why invest in it now? That's like,
but
buying a
again, I
Fusion
don't
thing.
view it as an investment, Congressman. I don't want it to be an investment.
So why
I
would
want it to be a
anybody,
payment mechanism?
why would anybody buy a stable coin, which today is a worse payment system for any honest person, on the theory that someday in the future, it may have a greater functionality than it has today?
Well,
why would anybody own a stable coin now, assuming they're not a drug dealer, a terrorist, or a tax evader?
Congressman, I think the question is, if we create a framework that addresses the risks, will stablecoins become a means of payment generally used? That question isn't clear yet.
The money market mutual fund already is.
Well, no, that's an investment in my mind. It's not.
Well,
I don't use that
I'm
to
sure
pay for
I
my
could.
coffee.
I'm sure I could find a money market fund that pays zero interest if I hated the concept of the world investment.
But I'm not. But there's a transfer agent. There's lots of reasons why I don't use a money market fund to go buy a pair of jeans or pay for dinner. A stable coin.
You certainly can't use a stable coin to do that. I'd assert that we're creating a stable coin to facilitate those who are trying to hide assets, and I'll yield back.
Does the gentleman yield back? Gentleman yields back. The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes.
Thank you, Chairman. That was a very interesting dialogue. My statement is not to be disrespectful, it's to be factual about where we're going. I think based upon the previous conversation, the question could be, why did they decide to make calculators when an abacus can do? That's just simply because technology is taking us to a place where it's far more functional. You could do so many other things. It's far more interactive. It's far more user-friendly, and it actually speaks to the experience that people are choosing to operate in, and no difference with how you choose to do calculations or how you choose to exchange, whether it's a currency, a stable coin, a cryptocurrency, et cetera. It's really the medium of holding value and or exchange that people choose to engage in. And obviously with where people are going, not just in the United States, but in the world, stable coins and crypto and blockchain technology are not going away. They are the modes of storing value and or transacting into the future. And so it would behoove us in Congress to make sure that we have a framework that allows for the proliferation of what human beings, especially Americans, choose to want to invest in and want to do going forward. That said, Mr. Fernandez da Ponte, the U.S. dollar is the asset that basically underlies 98% of transactions in stable coins. As stable coin use flourishes in countries around the globe, so does the U.S. dollar. Would you describe the role that stablecoins play in supporting U.S. dollar dominance, particularly given the current global landscape?
Thank you for the question, Congressman. The role of the US dollar as a global reserve currency is a fundamental strength of the US economy, and I don't think that we should take it for granted if this technology ends up generating that next generation of payment rails. As you said, the vast majority of stablecoins today are denominated in US dollars. I don't think that we should take that for granted. The reason for that is because the preeminent use case today is crypto trading, and the crypto trading markets are denominated against the US dollar. As these stablecoins make their way into mainstream commerce and payments, I do believe that we will see the appearance of stablecoins that are denominated in other currencies. Therefore, it's very important that stablecoins that are denominated in US dollars and issued in the US are able to compete with those stablecoins that are going to emerge outside. And also, I think that it is important that we have a situation in which not the vast majority of those dollar-denominated assets are issued by companies outside of the US and sometimes maybe backed by reserves that are not dollar-denominated either. We think that a clear framework for the stablecoin issuers in the US will contribute to the maintaining the US position and the US dollar position externally within with a strong competition driven by American companies.
All right. Thank you for that. Mr. Garrison, as we consider legislation to provide regulatory clarity to the digital assets industry, what role could self-regulation play in the larger market structure?
I think self-regulation is an important layer of the overall sector, right? I think we see that in the financial services world, and it works as a good model. Self-regulatory organizations have existed in the securities context since the beginning of our framework. We currently have FINRA. I mean, even the National Securities Exchange System is a group of each one a self-regulatory organization. So you see that on the derivative side as well with the NFA, and there's absolutely no reason why porting that concept over into the digital asset space would not make sense.
Okay, thank you for that. And lastly, Mr. Yahim, quick question for you. This kind of doubles back to the U.S. financial system's dominance. What's your view in terms of stable coins really being an additive towards not just U.S. market dominance, but also U.S. dollar dominance on the world stage?
Yeah, thank you for the question, Congressman. There's a wide variety of use cases that have been proven out, some that have not yet been proven out. It's very clear that stable coins are going to improve efficiency in cross-border remittance, and I think we've heard that from the panel today. It's going to be really important that the U.S. leads in terms of putting rules in place. Other jurisdictions have done this, not just for stable coins, but for centralized markets. They go hand in hand. If you look at the top 4% of assets on our platform, it represents over 60% of the volume, right? And 2 of those are stable coins. If you look at the top 10%, right, that represents almost 80 to 90%. So again, let's focus on passing rules for the most important pieces of the market today.
Thank you, gentlemen. Thank you, Chairman. I yield back.
They're giving out some great information, guys. Meme Lord, you there?
For 5 minutes.
Thank you. Thank you all for staying here so late. There's been a lot of conversation about the serious end of crypto, stable coins. I'm going to focus on the silly end, the meme coins. It's funny, we have all these rules of decorum.
Sorry, I was charging my phone because it was almost dying.
You're good. You're good. Yeah, the reason why we're playing this long is they haven't had this meeting since 2014. So a lot of things changed that I want everybody to see, and why they're politicking the way they are doing right now but it's like
starts to get a little
it
bit.
seemed like the
To
committee
a girl's coin. Has anybody,
that's
have any of you invested?
the new crypto. What's his name? I believe Michael.
They're fan clubs. Is really what
Yeah, I
it is.
believe so. Yeah.
I say that to raise a more
Yeah.
serious point.
So
Several of my colleagues
I don't
know,
like Waters.
President of the United
She
States
been in the
issued
space
something that has
for.
no
She hasn't been in the crypto space, but
it doesn't
she's an
have the value that
asshole.
maybe a Bible or
And
a
like what
scripture
you said in the
like
comments,
water has. It has no innate
she
value.
knows that she's getting
I
paid,
think $75.
and they're going to cut that out.
On the 19th. Anybody know what it's trading at today?
They're doing. That's what they're doing. They're paying her. That's why she's wanting a CBDC. And that's not the answer. The whole thing about crypto is decentralization. They want to control still.
Really volatile. You know, you boost your Q score and it bounces up, and then people.
But all this actually relates to Dogelon if you think about it, because if you notice, they've been saying the CFTC and commodities and securities, we're no longer a security, we're a commodity. That's why we're into derivatives. Actually, we're more professional, and a lot of I got a couple messages the other day saying, well, if everybody's leveraging against us and with us, they're gonna blow us out of the water, and they're gonna make us a pump and dump. And I go, technically no, because it's a long hold. Plus, all like we're a blockchain now, and with the blockchain, once Rufus chain gets implemented, not many people know this, but you can actually make a stable coin on Rufus, including DeFi protocols. And actually, Elon is a DeFi protocol because of what do you call it? The staking we're going to be able to do in order to do the land. So that's one. Two, the other thing is by them getting the gold check mark, that tells you they're a part or creating an organization in a company, a brand. So that helps us. Then us being actually on the contracts, like on like let's say Bybit and Bit, I think what was the other BitGet.
Yeah, big get.
They don't do that. Yeah, they don't do that unless you have a high locked liquidity value. And that's why I had put in my post that Elon has the highest liquidity of any meme coin out there. So that's why I think the devs are getting ready to launch. Not, maybe hopefully in a month or so, but I think they're eager just because of Rufus chain, and look at all the stable coins they're talking about and whatnot, and all the DeFi protocols. That doesn't relate to us anymore because to me, we step back as a meme coin, and now we're a fully, hopefully, I mean, once Rufus chain comes out, we're a fully functional blockchain.
And this is what I want to remember when the guy was talking about in November with the election that it was tokens that just exploded like Doge. He was trying to say Doge, but that wasn't just the only token that was surging. And it's crazy how you was talking about the Elon. That's why I post that comment, Dr. Lamar's. With the election poll results coming in, memes are continuing to receive high amounts of discussion across social media. Keep an eye on Doge, Elon, MAGA, and Donald Trump as top trending cryptocurrencies this week. Now, this post was in November 5th, 2024. You see it.
Yeah, actually I saw, Let me put my screen up. Oh, there you go. All right. There we go. Okay. Yeah. It's actually true because they know what's happening. They know what's coming. Like I said, to me, we're no longer a meme coin. I'm sorry. Everybody's probably going to hate me for that maybe, but it's actually in a good way because now we're looked at as an actual brand, an actual blockchain rather than just some crappy meme coin.
Right. So that's what people have to understand. Like, I understand, like, everybody like, they're just mumbling, jumbling, but I understand it feels like they're mumbling, but there's a lot of hitting, topics that they're saying in this speech. You get what I'm saying? Because it took this long for them to talk about November, how cryptocurrency exploded after the election. You get what I'm coming from? So with your take, Meme Lord, what do you think about this whole committee? Give me your take about everything, if you don't mind.
So it seems like they want clarity, and some of them are pushing back, like the dinosaurs. And I'm not ageism or whatever they call it. That I'm what do you call it? How do you say it? Disrespectful to older people. It's just
Right.
when they talk nonsense to me, it's like you're too old to be saying stuff like that if you don't understand the technology. But to me, it looks like they're focusing more on stable coins rather than like on decentralized infrastructures like DeFi. They even said there's no clarity on DeFi. So to me, it looks like they're still kind of lost and they're going to try to find their way, but in a good way. And what's good is a lot of the representatives that know crypto are actually negating what all the other ones are saying. Like, say, for instance, when she says Trump coin was a scam or whatever, it's not a scam. It's just a lot of people took profits. It's called volatility. It's the same thing with stocks. Look at what happened when Tesla went all the way up, people sold. And then, when he sold part of it in order to buy Twitter, it went all the way back down again. It's like stocks do the same thing. And to me, it's like they're thinking Americans are so dumb. They want to grab them by the hand and give them so much like clarity to the point where they're saying, well, they got scammed and this and this and that. No, they didn't get scammed. It's just everybody took profits. When you see a coin that was $2, $4, $5, $6 and it goes up to $80, of course you're going to take profits. That's anybody. So when they say it crashed, yeah, it went down to like 40, 30, whatever dollars, but crash to me means $0.
Yeah.
Where it just they drain the liquidity. And I got to look into it, but the tokenomics for me on the Trump coin were kind of shit. You could tell that they did take fees, they did take the fees and they used that as gain. But the thing is, it's in the tokenomics. So if you don't want to read and do your own research, then that's your own fault. That's not the fault of, not having clarity. That just means you're not doing your own research. It's like the same thing. The 401k, not many people know this, but like people don't understand, how do you think you get that money? One, they loan out your money. Two, they buy bonds. Three, they buy stocks. And four, they buy crypto. And they buy a lot of other stuff, but they're gambling with your money. So to me, it's like, what's the difference between going into crypto where you control your assets rather than having somebody else control your assets until you're 65? And then what
Right.
sucks about the 401k is, yeah, you only get double your money. They match you, if it's a 401(b) or a 401k, they match you. But why you can do that when if you say, let's say you can put your money into XRP, Cardano, Elon, where you're going to 10 times, 50 times your money, depending on what asset you buy. And the problem is when they say all these meme coins, they're not having clarity. They're this and this and that. Well, you know what a meme coin is. A lot of them don't have utility. A lot of them are just nonsense. It's just throw your money in a pit and hopefully you 10x, 50x. So to me, them saying all that about the Trump, I just think that was just like a dagger in the heart for them. They just wanted to kind of stick it to them to complain about the new order of crypto. But to
Right.
me, it just looks like everybody's just, if you notice, everybody was like almost begging, we need bills, we need more laws, we need more clarity in order to go ahead, like to get started. And like they said, a lot of other countries are way ahead of us right now because for the last 4 years we've been pushed back. Yeah, we've been pushed back like so far back that now they're catching up. It's basically like the opposite of when America went to the moon. It was just to beat the Soviets there. It's like now it's vice versa. All the countries are on the moon, and we're basically on the sun, burning to death.
Yeah.
But going back to Elon, that high lock liquidity, man, that should get everybody running in their head saying, you know what, like Shib, they're making a stable coin called Shy, I think SHI. But the problem, once again, it's not a freaking blockchain. It's a protocol which just sets rules. It's not a blockchain. Look it up. It's a protocol. Even if you put, like, say people are not believing me, go right now on Google and put on Google is Shibarium a blockchain or a protocol? It'll tell you it's a protocol. So on their thing, they say, oh, Shibarium layer 2 blockchain. That's false advertising. You're a protocol, homeboy. You're not a blockchain.
And you know what's so crazy is you have these people saying SHIB or Doge. Why? When SHIB has a fake they're a protocol, right? Like what you said, they're not on
Yep.
chain, but they're missing out. It's the reason why we're on the back burner. This is the reason why we didn't release our Rufus chain. It's the reason why we didn't do our burn. It's a reason why we are going to come out first on top of everybody once this do ignite. Because with this golden age of crypto, what I'll just, sat here for about 2.5 hours listening. It's just saying that, just expect a major parabolic run in the next 6 months.
That and expect NFTs to go up a little more too. Like how he was saying, now they're getting into real estate. That's why I'm into property. But I've been buying property, I think, since it was like 25, 30 cents. Because I said, wait, blockchain technology in real estate? I go, that's basically they're going to make NFTs. Your deed is going to be an NFT. It's like the same thing with the Mars, the land on Mars metaverse. You're actually, you're not really owning land on Mars, but in the game, you actually own that land. It's a piece of property and it's in the form of an NFT. So what I'm saying is, I have a feeling those NFTs that are on Solana, the Mission to Mars ones, like I said, I think they're going to be, and Crypto Loser agreed too, I think they're going to be used in the game in order to unlock certain features and stuff. Maybe like avatars and special things for your land and whatnot. That'd be cool.
And Trump is still accumulating a lot of Ethereum.
Including Ondo, Link, and BTC. And real quick, did you see that they said that they didn't want a Solana NFT? That's why Cardano pumped a little bit. They're going after Cardano. Why?
Yeah.
Like I've been saying before, Sol is trash. It's complete and utter garbage. And I don't care what anybody says. 8 years experience I have, 22 times Solana has been down. 22 times. If you calculate the time it's been down, that would equal 4 days, almost like 5 days total. It was down because it was down, like 16 hours, 18 hours. And then when the meme coin mania came in, 75% of their TPS, transactions per second, were failing because it cannot handle high TPS. If you look at their throughput, meaning the transactions it puts out, look at what it does. It will keep going, 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 going. And every like 5 seconds, it restarts the network in order to make the transactions go through. So like every 5 to 10 seconds, it's restarting itself in order to make the transactions go through. And to me, Solana's trash. I'm sorry. And it's actually, back in the day, it was 48% VC controlled when FTX lost all of its, money and all their coins. Now it went down, I think, to like 40%. So that's why I can't mess with something that is more VC controlled, because it's not fully decentralized. And honestly, no crypto is fully decentralized, but like I say, ICP. And actually, ICP just opened their San Francisco headquarters in California. They opened up a new headquarters. That means that they're coming to America. Why? Because did you see when PlayStation was down? Did you guys see that? The PSN
Yeah.
network? Okay, I think back in 2012 or 2014, it was down for like 30 days. 30 days. Why? Because it got hacked. How did it get hacked? Because AWS, Amazon Web Services, and Google Cloud Services, they're not hack proof. They're not, and they're centralized. That's why I don't like many cryptos. I mean, I stick to, there's cryptos I like, I have so many that I'm involved in, like 6 or 7. But technically, ICP is the only fully 100% decentralized crypto in the world. Why? Because it doesn't use AWS and cloud services in order to do the compute to validate their nodes. So technically, your data is in there. You just don't know it. And AWS has access to that. So that's why I'm like saying these big companies are finally realizing, wait, why pay Google and Amazon millions and millions of dollars to hold data that, look, we got hacked, the PlayStation Network was down. A couple other companies, like remember when Google wasn't updated or something and it crashed the whole thing, like people couldn't even fly out and all that. ICP, that wouldn't have happened. But anyways, getting off ICP,
No,
back
but
to
that's the
Elon.
same thing with the
No,
Bank of
go ahead.
America. That's the same thing with Bank of America as well, Silicon Valley. When everybody accounts was like frozen and nobody was able to withdraw any of their money or transfer any of their funds because the system was down as well.
Exactly. Yep. And guess what? Crypto didn't get affected by that. You know who did? Actually, the only cryptos that did were that do the validator nodes. You know, but you just didn't know it. And going back to Silicon Valley, like how they said that bank collapsed, it collapsed not because only of a bank run, but they lost money because guess what? They were buying with customer, like say when when you do a RIA or whatever, I don't even know how you call them, but I looked into them. Yeah, anytime they do a CD or whatever, and they say, "Oh, earn 5% every year." How do you think you're earning that 5%? They were putting it in bonds, and then bonds crashed. And then guess what? They lost everybody's money, and they were doing a bank run because they said, "Oh, the bonds are down. We lost money." So everybody took their money out, all because they were buying bonds. That's why I say, 401k and putting your money, no financial advice, putting your money into banks or in the hands of people that are what do you call it? That are playing with your money, I wouldn't do it. I wouldn't do it. I'd rather just get into crypto or stocks where I know I control all my money. And if I lose it, it's my fault. Nobody else's. I'm not going to cry, to somebody else. Same thing like when you get scammed, do not click any links. No, do not click any links you're not familiar with. Do not give out your info. If you do that and you're not doing anything shady, then you'll be okay.
Facts. Facts. And then well now what this post right here, Dog Get on Mars, me when I get a new listing. What new what new listing that you may think he's talking about?
He was talking about the Bybit one and the BitGet. It's because it's not considered a listing. It's just it is and it isn't because it's on perpetuals, right? But it's still, to me, it is a listing. But that is a listing. It's not a hard listing. It's like a medium listing. But the medium listing it's more of a business listing rather than, oh, we put another shitcoin on our exchange. Because if you when they announced it, a couple of people in the comments said, "What's this nonsense?" Like saying, why is Bybit listing a meme coin like that?" And if I go, when I put there, I go, do your research, has high liquidity. That should tell you something. It's high lock liquidity. That should tell you stable coins are coming and DeFi protocols are going to want to build on it just because of all the liquidity that's in it.
Now I have a feeling that the burn could be very soon. Because when he put the resurrection, why is the coins going up? You get what I'm saying? I know it's a
To me,
reverse.
oh, go ahead. Sorry,
No,
go ahead.
go ahead. Go ahead.
No, I was going to say about the coins reversing. I kind of got what they were saying. It's like basically we're going to burn, time we're going to sell, but then it's going to burn again. That's what I get from that. Is Rufus Trade is not only there to burn, but it's also to stabilize Elon as well. Because remember, Rufus Chain is on Arbitrum with Caldera, and with Caldera, we don't know what other special features they have on there. Like I've been saying, we only know, okay, a burn mechanism, but what else special features do they have? If you go look at all the other projects that use Caldera, they have special features that are for their blockchain.
Let me see. Let me see something. Let me put this down in here. 6.3. And then you want to explain, because like I know some people just came in. I said it on X. I said it's a buyback to add to the Great Burn. True Namek. I know you explained whereas why we're sitting at 202 right now on Bybit, but that's just for it to look good for institutional investors who want to, leverage or, accumulate more Elon. All right, guys, I got the call in. So I'm going to click that. That's the number right there. Call in if you have any questions for Meme Lord or I. Hit the number.
Can you hear me?
Now I can.
All right, there you go. Sorry, I don't know what happened. It says that I was.
Your your signal is breaking up.
Uh-oh, I think because I'm on 8%. You know what? I'm gonna go on my other phone and I'll be right back because this thing is dying. So let me just jump on my. It takes me 2 minutes. 2 minutes.
All right.
I'll be back.
All right.
All right.
Yeah, guys. So this is going to be a crazy year for us holders, and I'm just I'm just excited for this journey right here, man. Shout out to the 142 people that is in this space. Did you guys take in information, what you guys seen in that video with the committee? They're still playing.
The UK move forward with legislation on staking. We've seen other jurisdictions do this. We know the United States can do it. And so that's one priority for us. Kraken did testify in Congress, and the next day,
All right, I'm back.
phone call.
Okay.
Said you're getting sued on another business. I made sure not to wear that same
I'm
tie,
mad I can't
for the whole
add
hearing.
more to the bag right now.
But
It's all right. It's going to
It's
happen.
important that we move past that. And I know we want to make sure actions of the
Trust
past
me,
administration
I
take into
want
account
to
what
accumulate
we are
more,
looking
but
for, and we think there's been a lot of bipartisan
that
support,
fiat look crazy.
that's necessary to get this bill done in this Congress.
I'm glad
Right.
to hear that, and to
Yeah.
all of the panelists, I really appreciate you.
Anything else you want to say, bro? Like, shit, run the
Look
stage.
forward to your suggestions.
Oh, okay. I was gonna say because I hear that background noise, like those guys
Gentlemen,
talking. I was saying, you don't mind?
Our portion of the questions. I'd like to thank our witnesses for their testimony today. Without objection, all members.
There you go. Sorry about that. I have really bad concentration. So like going back to what you said, the 202.
Yes.
Like I said, that's just to make it more appealing because a lot of people on Bybit and BitGet, those are people who've been in the game a long time. They're gonna be like, "What's this coin? What 6 zeros?" Now, when they see 2 zeros, they say, "Oh, this is interesting." And like I was saying earlier, people are gonna say, "Oh, we're gonna get over leveraged. People are gonna take our money. They're gonna make us go down and all that." Not really, because like I said, we're a blockchain. We're not a meme coin that's pump and dump. So I know the devs are ahead of this. They already factored this in, and I think that's why they're taking their time with releasing some stuff. Because, like I said, they're polished. They have to be polishing some stuff.
Right.
Especially if they made it where you can play it on iPhone, Android, basically anything that has a web browser in it. But I think they're gonna make a stable coin on the blockchain once it comes out. Maybe that's some of the partnerships we have. Maybe once we get like a DeFi protocol on there. Oh wow, it's like it's gonna be burning a lot of Rufus, a lot of Elon, because like it says, anything that interacts within the blockchain burns Elon. That's why I think the great burn, it has to be at least like 20 to 30%. Anything more that's like 40 to 50, it kind of jeopardizes, you know, the interoperability and the capability that Rufus can do. So that's why when people hear the great burn, and if you see it's not that much, don't get sad. That's because Rufus is going to be burning more than the great burn, honestly.
Okay, hold on. I want to play this. Pierce, here it is.
Commissioner, does the president and first lady launching their own meme coins make your job more difficult?
I think one of the things we're trying to do is look at categories of tokens that are out there. There are lots of people who are introducing meme coins right now. Facts and circumstances matter. We always have to look at the facts and circumstances. But many of the meme coins that are out there probably do not have a home as in the SEC under our current set of regulations. And so again, if that's something that Congress wants to address, they can do that. Maybe that's something the CFTC wants to address. But many of those, I think, probably are not within our jurisdiction.
Did you hear what she said? Let me run it back right quick.
Circumstances. But many of the meme coins that are out there probably do not have a home as in the SEC under our current set of regulations. And so again, if that's something that Congress wants to address, they can do that. Maybe that's something the CFTC wants to address.
Come on, guys. You heard what she said. And you guys already know the CFTC already got us in regulations. We are known as a financial instrument, a commodity. Meme lord.
And now we're considered not only by the CFTC we're a commodity, but by Bybit actually listing us as a perpetual, that tells you we're labeled under the CFTC as not just a commodity, not just a meme coin, not just a crypto project, but actually a business tool in order to make money. Because like in the end, we all love Elon. We're here not just for that, but also to make some money too. That's the name of the game. So that's making us look very good towards business people who have money, institutions, not just retail investors, whales, those ones where they hire basically somebody like me and say, where do I put my money at, that I can make, where I can make it tenfold or something. And that's where they're going to be leveraging, Elon for at least 50 times. Yeah, it'll make the price go down a little bit, but you know what I kept telling people? Just buy it. You know where it's going. Now, if there was no utility and we were just like I would say like Doge, where we rely on others to lift us up instead of utility speaking for itself, then I would say, yeah, we're screwed. But getting labeled by the CFTC as what you said, that's like really huge. That's big. Like not even SHIB has that. Yeah, they're gonna make a stable coin and all that, but once again, they're not a blockchain. They're a protocol. And I think once people see what Elon produces out with Rufus blockchain, I think everybody's going to be crapping their pants. And that's when we're going to see how they said it. I don't believe in the super cycle. I just believe in a lot of money's going to be coming in and inflowing after we get like clear regulations. A lot of people are going to be flocking over to our blockchain just because one, it's newer. It has to do with Mars. And now, if you notice, we were called a politify coin.
Yeah.
We were. So now we're connected to Trump, Elon, Mars, DeFi. I almost said Wi-Fi. DeFi, Web3, GameFi, AI, a metaverse game. Dude, we're hitting every category that's driving this market this year, including AI. And if you notice, they said, "Oh, we're up." This was from the Doge on Mars. They said we're upgrading our AI agent. If you noticed, a lot of the stuff they've been putting out now is like more solid. It's like more. It's like it looks more like I would say less like not that a 5-year-old didn't look like that at the time, because that's what Pepe looks like to me. Like a 5-year-old did the website, including a couple other big meme coins. Even the Donald Trump one, not throwing shade on that, but even that one, it doesn't look as polished and nice as the Doge on Mars website. But if you've been noticing, the AIs and the stuff that they've been putting out, it's like more clean and polished. It doesn't look, like kind of boring. So to me, that's like hitting that's telling me, imagine that's just you creating NFTs or whatever you want. Imagine the AI in the metaverse game. Because even Public Sapient came out and said it's something that hasn't been done yet, and it's very advanced to the point where nobody has done that yet in the metaverse. They just all, like, even Shib, they even did what drag and dropping, and what's the fun in that is everybody's going to have the same thing. It's just going to be boring. It's going to be the same old, same old. But with Dojalon, you're able to build whatever you want by telling the AI what you want. So to me, that's more of it's like your personality on your land rather than somebody else's thought process. This is all your thought process. This is all you building. So basically, that AI makes anybody into a builder.
And didn't you hear how the dollar is slipping?
Oh yeah, because remember what I told you? The next 2 years, they're gonna have to print $10 trillion because they're still like $37 trillion in debt. And $10 trillion of that is re-rollover refinance. So the government has to pay that. And I think, I'm gonna be honest with you, I don't have proof, but I kind of think they've been selling the Bitcoin from another wallet in order to pay off that debt. But the dollar is slipping just because everybody's, even a couple analysts that are smarter than I can ever be, they've been doing it for so long. They've even said, why not sell gold to buy Bitcoin? It's like, bro, you've never heard anybody say sell gold for Bitcoin, because gold was king. After we got off the gold standard, like I was saying in the comments, America messed up and they know it. So what are they doing? They're trying to figure out what to do. But at the same time, they don't want to do anything, because why? Why, when they can keep printing money, you know? And that's what's devaluing the dollar. But I think with Trump in office, not giving everybody all this free money anymore, it's going to stabilize the dollar, which kind of sucks. It's going to make Bitcoin go down a little bit, because it's called the Dixie, by the way. So the Dixie chart, that's what you call the dollar. On the Dixie chart, once the dollar stabilizes and it goes higher, Bitcoin goes down, just because dollar dominance is high. But at the same time, I think in this cycle, that's not going to matter. It's not going to matter at all, just because now you have institutions buying a lot of Bitcoin, including a lot of countries who actually want to make it their main reserve. And as far as when people, like when she said, I think Maxine said it, when they said, "Oh, well, China is wanting a CBDC and all these other countries," yeah, because they want control.
Yeah.
They want to see what you're doing and all that. And about that guy Foster saying, "Oh, the 15%, it could be for nuclear weapons," and see, they're creating fear. Bro, if I really wanted to, I could get my money out of the bank, go buy a nuclear weapon, and blow up everything. I'm not gonna say I am, but I'm just saying anybody could do it with money, gold, silver, anything that's of value. So when they say that, that's just stupid. That's just stupid, because that don't make sense to me. That's like
It don't.
anything is bad. Yeah, anything is bad. It's like Facebook, right? Facebook, you reach out to family and friends. You're like, "Oh man, I remember going to high school with that guy." Other people use it for whatever else evil, to do. It's the same thing with the internet. It's the same thing with money. When they say money's the root of all evil, to me, it's not. It's what you do with it that makes it evil.
Right.
So you might as well just say that about everything. Same thing with the car. You drive a car, and some people use it to ram into protesters or whatever they do to kill people. Same thing with a gun. It's for protection. Same thing with alcohol. It's there, to have if you want a good time, you hang out. But there's people that get in the car, drink and drive, and kill. So it's like, oh, you might as well say that about everything.
Well, I believe it's going to be a one major push, because, like what you're saying, the dollar's grip is slipping. Russia and India. Now, India is like, they have what, over 1 billion people in that population, I believe, in India.
I believe so.
And they say now settle nearly 90% of their transactions in national currencies, a massive leap in global de-dollarization. The financial ties between Moscow and New Delhi are only getting stronger. Trade surged 8.6% in 2024, hitting $64.5 billion. And Russia is now India's #2 supplier after China. Even bigger talks are underway to link Russia's MIR and India's RuPay payment networks. If this happened, financial integration between these two giants will hit the next level. With major economies moving away from the US dollar, the global financial order is shifting. The petrodollar era is fading fast. This is the biggest shakeup in global trade we've seen in decades. And with that being said, Cynthia Loomis says, in the real world, if you break the rules, you get fired. Somehow we've let Jerome Powell break the law, yet he continues to wield enormous power. The buck stops here. I believe the United States is going to overthrow everything. And I know this, not trying to throw hopium or whatnot, but it's just facts of what you're telling out, great information and facts, and what we listen to on the committee. Crypto is going to explode. And I'm not just saying it's just going to explode for like a day or two. It's going to raid because a lot of people don't hold that much digital currencies. Again, there's 11.1 million current cryptocurrencies in the market. Out of those currencies, again, last month, it was just only 10,000 cryptocurrencies. Only 10,000. And out of those 10,000, and out of 11 million crypto coins, we are what rank? We're on what rank right now? Hold on, Meme Lord, because I'm gonna get you back in here. Hold on.
No, you're good. And while you're looking for that,
You got me
remember
hype
that.
right now.
Yeah,
Hold on. You waking up some. Listen.
all right.
We are ranked number 345 out of 11 million tokens in coin market cap. Let that wake you up. Like what Parabolic Paul, we are in the top 500.
Actually, if you go where it says, like if you go to the, how do you say it, the home screen of Coin Market Cap, and you just look up at memes, look at right there where it says memes. Look down, and we're not that far down the list of meme coins. Yeah, see if you could find us. We're not that far down. We might have went down lower just because of. Yeah, okay, but see how long down the list we are just in meme coins that have been looked at, that have been purchased and all that? We're not that far. As far as in ranking, we are. But if you notice, look at on the meme coin category. We're like the top, what, I think 20 or 15, whatever that, whatever that we are. I think we might be 25 or 30 now because we went down a bit.
But when we click on, let's see, political memes. Where are we on here on this? There's a whole bunch. See, there's a whole bunch of different type of memes on here. So I can't really look on that one there. But on news, on everything on Google, there's only 4 tokens of the politified memes. Donald Trump coin, Melania, Elon, Doge.
Yeah. And going back to real quick, remember BRICS was no longer using the dollar either. That's Brazil, Russia, India, China, Saudi Arabia. They even stopped the petrodollar. So actually, I think when Trump saw that, when he wasn't president, he was like, that's scary. That's scary. That means that a whole bunch of, it was like this one movie I just watched on Netflix the other day. Cause like I said, I'm just sitting here, like I can't do much. There was this movie and it was basically saying that a bunch of they were like, who started this cyber attack? It was a cyber attack. It's a good movie. It just leaves the endings kind of bad if you don't understand it. But anyways, they were saying it was a whole bunch of countries that got together to destroy America. But guess what? In the end, it wasn't. It was America who did that on purpose. It's like a crazy movie. But what I'm saying is, to me, that's what I think they were trying to do. They were trying to like all these for the last 4 years, they were trying to crash crypto at the same time the dollar. So what they could do is they were buying every crypto they could, every stock they could, because they crashed the market. That's why if you notice, and what I don't understand is real quick, that the Department of Governance Efficiency. Like I
Yeah.
said, I'm not political. I'm neither Republican or Democrat. But to me, is I see that people are getting mad that they're closing down all these BS government buildings and stuff, and they're getting mad at that, but not at the fact that there was like billions of dollars being commingled between a whole bunch of companies, people, and all these politicians. So that's why I say when they say they don't in this day and age, people don't think for themselves. They just think what was told to them. So that's why us being in crypto, we know the good, the bad, and the ugly side. That's why we're in crypto, because we want control. We don't want to give it to anybody else.
Right. Right. So, my question to you, Meme Lord, do you know offhand the market cap of Wall Street?
I do not actually. No, I do not.
Of everything. Let me see. That's what, because I know Apple by itself, the corporation, is worth $3.5 trillion. Just Apple alone.
Right. And
Um,
and and when the stocks, when we went down, the last 4 years stocks went down,
uh-huh.
because of what happened. I automatically bought Shopify, Meta, I was heavily into Nvidia, and then I bought like the Honest Company and a couple other companies that I saw that were way down. Not gonna lie, I literally 500x my money just buying into that type of stuff. So that's what I was gonna say. When they said there was no recession, bro, there's a recession when let's say for instance construction companies take a hit and when the tech sector takes a hit. That's another thing. Check out Nvidia, because Willow, that new chip that they're doing for the AI, is coming out 2025. Not financial advice, but I've been loading up on Nvidia again because I bought it when it was 265, and then I sold it I think like at $985. And then after I did that, my friend calls me or somebody says, it went up to 1100. I go, I don't care because it's going to go back down to like 165. They're about to, I forgot what you call it. I said, but they're about to make it go down. And then look what happened. Like 4 or 5 months later, it went down to 165 again. I said, see, I know what I'm talking about. So in that aspect, I don't know the global market or the whole S&P or whatever, but I know stocks, and I love buying stocks too. Not gonna lie.
Yeah, you're absolutely right, bro. Oh man, there's just a lot of money that's going to be flowing into this whole crypto market. That's why they're calling it Wall Street 2.0.
Oh yeah. Oh
And what
yeah,
I
because they
was
know.
looking, I was looking at I was looking at the futures and the perpetuals. $646 billion in a year, and just that open interest perpetual 628 billion. You see that, Meme Lord?
Yeah, that's a lot of money.
Yeah,
That's a
but
lot of money.
when I was looking at Walmart, they're talking about. Let's go to Walmart right quick because you know a lot about the stocks and whatnot. They were saying like not the annual. Let me see. I was just at it.
And Walmart, actually, I was telling people to buy Walmart back in the day ago. It's like the next Amazon. Just because if you notice, you can get your groceries the next day, the same day. And then they have, I think it's called, what is it called? It's called Walmart something, where they actually bring the groceries into your home.
I forgot the name. I know what you're talking about.
Yeah. So I said, man, Walmart's a good one, is another good one to buy. But what that sucks about the stock market is it's super long term. Depending on what you're putting your money, you won't see it for like another 5 to 10 year gain.
Yeah. Yeah, it's just expect trillions flowing into the crypto market, man. That's all I can really say.
It's going to be, I'll say it's probably going to be more than that. I'll say probably the whole crypto market, when the bull run happens, you're probably going to look like at $7-8 trillion. What are we at now? Oh, no,
We're
we're
at
at a
3.5.
3.5. Yeah, I'll say, go ahead.
3.1.
I'll say when the bull run hits and all these altcoins start shooting up, oh man, you're probably going to see it like double that for sure. For sure. Because
Just go ahead.
I was going to say, you can tell just because remember when Bitcoin went hit 107, if you look, it was almost like at a $4 trillion, like the whole crypto industry. And then when Trump coin launched and I looked at when it went to like 86, that went up to almost like 3.5 trillion to $4 trillion in the market. I was like, wow. And that's just one little hype coin.
It's crazy. It's crazy. Oh
Also, should we address that somebody said that Elon's going to go to $100 billion market cap? I've been seeing that floating around,
yeah,
and I looked at
he's
it and
aggressive.
I laughed at it. But look, I'm not a hater. Okay, I've been doing this for so long. There is absolutely no way that will happen, and it's not being a hater. That would mean that it would be the market cap of, dang, what was it, Sol? It would have to be the market cap of Sol and half of, I think, of another crypto. I forgot what it is, but it would literally, and these are the top 10 cryptos I'm naming. One of them, like I said, is Sol. I think it's like at 89 billion or 90 billion, something like that.
97 million right now.
Yeah. So if you take that and then you take a little bit of another market, like from like, let's say, it's hard to say because I'm not on there. Honestly, I think the most we'll see is maybe like a 30, like maybe
That's not bad.
yeah, the lowest is like 10. The highest would be 30, or sorry, medium would be 30. And I would think on a good day, like if it says everything is how it's supposed to be, it could be like a 25 to 30. Anything higher, I don't see it. And that's not hating. That's just saying that there's so many cryptos out there, but what would get it there is if the blockchain they're creating is like massive, and that's what I'm waiting for. Once I see what partnerships and who's building and I see DeFi protocols, and then if I see a stable coin, then actually it is possible to be like in the top 10
Now
cryptos for
another
sure.
thing. Now another thing. You're making that's perfect sense, and you're absolutely correct. Now with the whole Doge administration, what they're doing, where I think they cut off $1 billion from the Department of Education. They're cutting off so much of these funds that's being sent out of waste of our tax dollars going here and there. I believe we're going to have, with that being said, with them doing that, and what we got going on with our own Rufus blockchain, with the new partnerships, with everything, plus with the burn as well, which is lowering our circulating supply, because every time someone trade, buy, or do anything on the blockchain, it uses Elon as a gas token, just like Ondo. When it's on chain, they're using Ondo as a gas token. Like what Meme Lord said, we do not need to create another token. We're still using Elon, but also having Elon as a gas token. So which meaning the burning mechanism. So with that being said, family, like what Meme Lord was, what we've been talking about, yes, 10 billion could be the lowest. 10 billion could be the lowest. And we're not talking about no skyrocket, let's just be realistic. 10 billion to 30 billion. Shit, we touch a $1.4 billion market cap in the first year. So imagine
Look,
$30 billion market cap. And there's no telling, like what Meme Lord says. We're the top 4 politified tokens. And you see Elon, he been coming out, addressing certain things, taking pictures and doing videos by President Trump in his office. Now he been talking about these other tokens, and people get mad because they get pumped and dumped. He can do whatever the hell he wants. But he has been posting a lot about Mars. We're in February. We still got 3 more years of this man, but not just Trump. Everybody's thinking it's just Trump, but the main focus is Elon. His main mission is going to Mars. Now, our mission is going to Mars on our metaverse, our blockchain, the burning mechanism. So a lot of things can come in play, but what Meme Lord says, 10 billion is the least, 30 billion may be the max, but things can change. Go ahead, Meme Lord. You were about to say something, bro.
oh, no, I was just saying you're right, actually, like the 20 to 30. But I was gonna say, once we know what that blockchain has and what it does and who's building on it, the sky's the limit. Like I said, once we see, like, say for instance, Ondo, right? Now it's Ondo chain. Just pay attention. I was gonna say, everybody pay attention to what a blockchain does. It actually adds like less volatility. Yeah, there's still volatility, but now you're not a volatility meme coin. That's one. Two, developers can build on it whatever they want. Three, you can build a stable coin. What would be cool is if they called it MUSD, which is like Mars United States dollar. That would be dope. You know how fast people would jump on that. So hopefully the stable coin does come, and it should, because we have so much locked liquidity. That's what you need when you're making a stable coin. You need, not only is it pegged, but also you need a large amount of liquidity, and Dogelon has that. And that's why I had said we're not looked at like at a meme coin no more. I'm sorry, but after Rufus chain comes out, oh boy, we're a full-fledged 100% blockchain. It's like the same thing with ape chain. You know how ape coin, nobody was saying anything, like nothing was happening. Look at, as soon as ape chain came out, they shot up 150%, and they stabilized a little bit just because they're a blockchain. The only thing is, I don't hold me to it, but I don't think ApeCoin gets burned when you interact with the blockchain or anything like that. So that's the main tool that Rufus has, is just the burn mechanism in it. And I can just imagine how much, to me, if the Great Burn comes out and they burn like trillions, I'm like, cool. But the giant major super duper what they said, Dogelon super cycle is when Rufus chain starts burning. And what's cool is we have a burn bot. So you're gonna be like, wait, what's transaction? Be like, wait, what happened? Not only is there transactions, but interactions in the blockchain.
Bro, we touch a $1.28 billion market cap. $1.25 billion market cap. And I believe that's when we reach our all-time high of 4 zeros, 3263.
That was when we got on Crypto.com. That should be back in October, if I'm not mistaken. That's when we got listed. Check
Correct.
that out. That was just with Crypto.com listings, bro. This is not with the Great Burn. The what do you call it? Rufus blockchain, the AI metaverse, the AI NFT creator we have, all these partnerships. That's not including all of that. So that's why I say, if it goes to like the 301 to 304, which is my high target, my medium target and low target is 404 all the way to 409. So to me, that's why I say the 10 to $30 billion market, or them having the market cap. I feel comfortable saying that just because you just go by off the old chart. It didn't have any utility.
Right. And what people got to understand, listen, man, there's no way how you cannot make no money in this token. I'm sorry, we're here for, the money. How can you not make no money where we're at 6 zeros? And we shoot up to fours. I'm going to be honest. We shoot up to 409. Hold on. Let's see who this is. Yo. It's Crypto Brown.
What's up? It's Derek. I listen to y'all all daily. I appreciate it.
Oh, you welcome.
Hey, I had two questions, I guess, for you. At 10 billion coins, what do you think would take for it to get like at least 1 million? And then with crypto meme lord, can you all like elaborate a little bit more on the metaverse for like buying land, or could you do more videos about that?
Meme lord.
So he was talking about how you go about buying land in the metaverse, right? In our metaverse, the land on Mars.
Correct.
So most likely, that's why I think we're partnered with Magic Eden. Is they're probably going to host them on there as well. Anytime you buy land in the metaverse, it's an NFT, so the non-fungible token. So what you do is, like, say for instance, okay, there's a plot of land. You know how, depending on how big it is how much probably they're going to want for it. And also, it did say the only way you can buy land is if you're staking. So maybe also it depends on how much you're staking as well. And on the good thing about it being NFTs and parcels is it's more transactions within Rufus blockchain. But that's how you buy. It's like the same thing for Sandbox, and any other like Mana. It gets held as an NFT in your wallet. So like say for instance, I was in this metaverse game. It didn't work out. They bit off more they can chew. But now I have 4 pieces of land in my Trust wallet. So that's how it goes. It could do in your MetaMask, your Trust wallet, whatever, however you want. And say if you want to sell it, like say for instance, say Coca-Cola, buys land next to you, or just say for instance, another company, you could actually trade it and sell it. That's the good thing about it. It's just basically like a home. You could buy, trade it, and sell it.
Facts. And then also, rolling with Ro, he posted, he says 10 billion is at 1 million at 301. So if you got 10 billion tokens and we shoot to 301, that's $1 million.
And that's what I tell people when they say, well, how much tokens do I need? I go, well, put it this way. If the target price is 404, or let's just say, 301, put how much you would need in order to either change your life or to pay off your bills or to buy a house or apartment, whatever your heart desires. Do that from there, and that could tell you how much you need. Because like we said, we love Elon, but in the end, we're all here to make money too. But the good thing is, with all this utility being implemented, this is going to be this project's going to be around for a very, very long time. What, this year is already going to be 4 years? Bro, I would say we're going to make it all the way to 2031. And that's when I think, and everybody's going to be like, no way. I think that's when we're going to hit like the 2 zeros to a penny. It's possible. But remember, you have to burn a lot. And the whole thing is when people say, oh, the great burn, it's going to make the price shoot up fast. That's negative. That to put it this way, if it does, then that means there's some tomfoolery happening within the blockchain. It's kind of like, I don't want to say this specific token because then they're going to think I'm coming after them. But there was a specific token that says burning half the supply and all that. And I go, okay, cool. After they burned it, the price went up maybe like 30%, and now it's at 0. Yeah. They folded because they didn't have nothing else. They just thought burning was the answer. But in the end, burning, it makes the price go up, but within a year, 2 years, not like
Not dry.
months or weeks. Yeah, not yeah, it's over a period of time. That's why I said even if it takes like 7, 8, like well, I said the bull run is probably ending or even starting like in October. Don't
Right.
quote me on that, but that's what my charting says. The new one, because I can't go by the trend is your friend
Oh
no
yeah.
more because of yeah, and the rainbow chart. Yeah, you can go off it a little bit, but oh, not too much, because now you have institutions playing with money,
Right.
and all of these people, especially what Trump wanting to make taxes on crypto is almost zero, almost
Mhm.
zero.
Hope so. We got another caller. Who is it?
Hey, this is Zach. I'm in North Macedonia. How you doing?
Pretty good, pretty good. I'm glad you checking in with us.
I appreciate it. I just have one quick question. Have you guys heard anything about Trump not or putting aside the capital gains tax on crypto?
No. I mean, I believe he's still going forward with that. Anything American made tokens, capital gains tax, he's taking that off.
And that includes Elon, since we're American made now.
Correct.
All right. Yeah, because I mean, once you're a U.S. citizen, you pay taxes no matter where you live. So I've been overseas for 6 years. I still pay taxes on what I make.
Wow. Wow.
Same
But this
thing.
is why.
Same thing here. Real quick, I actually used to be in California because of all the crypto regulations. I moved to Dubai, and that's where I'm at right now. And I'm gonna tell you right now, out here, there's zero taxes. I think they charge maybe like a 1% or 2% investment fee. But over here, I pay zero. But because I own real estate out there, I pay taxes. It's so funny.
Nice.
Yes, sir. Yes, sir.
All right, guys. Well, I'm going to let you guys go. Kind of expensive to call for the U.S. from here.
Oh man. Well, we greatly appreciate you tapping in, brother. And if you have a computer or whatnot, and you would like to, come on the screen, that's free. If you want to, just hit me a DM if you have any more questions. Okay.
All right, man. I appreciate it.
I greatly appreciate you, brother.
You guys take care, and me more prayers out to you. I hope you feel better.
I appreciate it. Thank you so much.
Talk to you guys later.
All right, bye.
And actually, I was gonna bring that up because tomorrow I'm gonna be disappearing for a little while. Tomorrow is my second chemo treatment, and what sucks is I have 4 bags. One is an hour, 2 of them are for an hour and 30 minutes, and then the fourth one I have to bring home for 2 days, and it's gonna be pumping in me. So I know those 2 days, and then 3 days after that, it feels like I get hit by a truck. So if you guys don't hear from me, it's because of that. I'm okay. Everything's good. It's just, man, that chemo gets you.
Right. So everybody who's watching, man, we got to keep those healing prayers towards Meme Lord. Meme Lord. I mean, shit. We rocking and rolling. I believe this is the longest we ever been on live. 3 hours and 27 minutes.
I think more. Remember when we got on the live and Bitcoin hit the 104?
Oh,
remember? Yeah, we were on there for like 4 or 5 hours.
But it's just that was a great question. What the guy asked, he was like, with the capital gains tax. And what I was gonna say is, this is the reason why Trump is trying to make America the crypto hub, because there are people like you, Meme Lord, who made money off of crypto and moved out of the country because of the taxes. But now, since we're doing this and there's no capital gains tax on American-made cryptocurrencies, that would bring people back. I don't believe that it will bring everybody back from different countries that move from America, because they may like it where they're at, but it's just going to make us more want us to stay here in the United States, because we have this wealth. We have accumulated, we generated this wealth. We're spending our money in the US to purchase more land, purchase more property, real estate. You know, hold on, we got another caller. It's Crypto Brown the Meme Lord. What's going on?
Hey,
How you doing?
I'm good. I have a question.
What's up?
I've been in crypto since 2017. Maybe me and Lord can answer this. Is there any way we can shoot up, although the market manipulation?
She's saying, is there a way that we can shoot up through this market manipulation?
I would say, do you remember a while ago we went up 150%, and that was just by nothing happening, no utility, no nothing. I would say it's possible, but at the same time, what's bringing us down is the whole crypto market is the tariffs that Donald Trump is doing. So that's creating a lot of market uncertainty right now. That's why we're so low. Because when he did the 25% on steel and I forgot the other thing, if you notice, we went down, and then since he's been talking about tariffs, so I would say it's hard in the immediate short term, but in the long term, you already know. If you've been in here since 2017, you already know. But that's the biggest thing why we're going down is the tariffs.
It's just trying to get my family on board. They want it right now. I keep telling them you have to be patient. Be patient.
You have to.
Exactly. And remember, crypto is 100% mental.
Very much.
You're welcome.
Just to let you know, my phone's on 5% on this one, so it's going to die. And I have no other phones right now.
All right, so what we're gonna do, we're gonna close this up. But Meme Lord, if you have anything last you want to say before we close it, go ahead and say it, bro.
Again, just I wanted to thank everybody who sends prayers every day. Like I get messages, saying stay, hang in there, stay strong. And honestly, I appreciate it. And some of them do make me cry. And because it feels like I'm not alone. I feel like I'm in this fight together with all of you guys as a family. And what sucks about being out here is my family's not around because they live in the United States. And I was supposed to move this year, but with this happening, I can't. But you guys actually, I miss my family, but you guys make it a little easier for me by all your prayers, your healing vibes, and everything you guys do for me. I appreciate that. As far as in Dojalon in the market, anytime you see it dip and you know what's coming in the long term, meaning this year, hang in there. Don't give up. Stay strong.
Man. Meme Lord, you're always family with us, man.
And that's why it doesn't feel like I'm alone. Like I said, I have my girl, but there is times where you need not. It's a trifecta. You need religion, God, or love and family. Those are the trifecta. Yeah, the doctors are doing their part of it, but only he can say when it's time for me to go. And I look up and I know it's not time for me to go, and I know I'll be okay.
Right. Everything is gonna be great. Everything is gonna be great, Meme Lord, and we love you, bro. We definitely do, and we love the knowledge and everything you share with us, man. Because you didn't even have to do that, and I greatly appreciate it. And I love to give you my flowers because you know what I'm saying. I mean, you've been here since day one, so we greatly appreciate you, Meme Lord.
And we appreciate everybody also for coming on and sticking with us for so many hours. I even see some of them, they wait in the comment section like, where are they at? Where are they at? And it's like, wow, we appreciate that. And I do see things like that.
Right. So once again, family, we love you guys. Again, keep Meme Lord in your prayers. But until then, we're heading to Mars.